Test, test, test. Hey, good morning, guys. People online. Just kind of getting started over here. Just a second. Okay, let me know if you can see my screen. Today's a rainy day, so I'm guessing maybe not a lot of people. Okay, let's see. Can you guys online hear me okay? Okay. Well, so today's a super rainy day, but thanks so much for coming out. I hope a few more people show up just to make the room more exciting. But anything new with you, or did you watch Gold? Gold's been performing a little bit.
Yeah, I know you would mention it. No, I didn't do much. I didn't trade anything. I've been just watching it. I didn't do anything.
Yeah, I've been more on the swing trader side. I think you're more of an active options trader, right? So you're doing more intraday stuff.
Not intraday, but a few days, let's say.
Okay, a few days.
Depending on when I make the goal.
Yeah.
And then I have the criteria that how many days after I sell, when do I need to do kind of roll it out.
Okay.
If it doesn't work or whatever it is.
Do you look at options charts too, or do you just kind of look at the stock price or the index?
The stock price is the main movement, but the option charts is just, I mean, the premium you mean. Is that what you mean? I look at the deltas and all, right? I look at the Greeks.
Oh, you can pull up the price chart too.
Yeah, I can pull the price chart.
Okay.
I pull the price chart on Thinkorswim.
Yeah, I'm just kind of curious about like how you kind of operate. That'd be interesting though.
Yeah, definitely.
For me, I don't know if you noticed, I'm more of a.
Yeah, you do more long Vega, you were saying, right? So you just buy the premium, right? I kind of.
Yeah, well, I mean, so I could go long volatility, but these days I'm more of a I'm focused on momentum. There hasn't been any momentum as of late, or like nice momentum.
So you go on these kind of products, like UVXY and these ones, like a volatility product?
That one I'm still training. I mostly do stocks, so like.
Let's give me an example. So let's say you pulled out the workday. What would you do for workday?
Yeah, I would find, let's see, trendy situations like this right here.
So you're looking at the technical support and resistance at that point, right?
Yeah. So I'm mostly I guess in a simple nutshell, I look for. You could say I'm a 20 MA trader.
20 MA trader. Yeah. 20 MA.
Yeah, I just swing the breakouts over and over and over.
And you just buy the stocks, though? Or, no, you do buy the options, don't you?
I use options to like 6 months out, but as of late, it's been a difficult environment. But ideally, I would look for just breakouts and just trade it over and over.
So you would. This is your chart for what, 1 day?
So I always operate on the daily chart. So I guess the easiest example would be Microsoft, because for the longest time it proved the lowest amount of volatility.
Yeah.
So stuff like this. So you see how I would just draw right here. Every time it goes higher, I would just go long, and then maybe take some if it breaks, but then just like remain long for like some time.
And what was your time frame where you entered your last line versus the top line? What's the time?
So I could see something like this right here, like an earnings gap up. Hey, welcome guys.
The door was locked.
Oh, yeah, the front door was locked.
You know, it was locked.
The bottom one, is it? Oh, so sorry about that. Did you guys leave it open by any chance?
I don't have no idea. You'd have to ask her.
Yeah, the lady opened it up.
Oh, I'm sorry about that.
Came in.
I think the wind probably. So I normally leave it open. I apologize for
When
that.
I came, it was open.
It was open?
Yeah,
Maybe
It was locked.
Okay, that's probably why people can't get in. Okay, maybe I should. I'll give it a few minutes. If no one comes in, I'll probably go double check real quick if you guys don't mind. But welcome.
It's locked now. They're gonna leave.
Yeah, they'll probably call me or text me. But welcome,
I
guys.
can go check. Should I go open it?
Yeah, if you could.
Why don't you?
Okay, thanks so much.
I will go.
Guys, welcome. I guess it's your first time here.
Yeah.
New faces. My name is Kay. Nice to meet you.
Mayank, same
Yeah,
here.
Mac. And what's your name?
Mayank.
Bob. Nice to meet you, Bob.
Hi, Bob.
Hey. So, where are you guys coming from? Just South Bay or
Saratoga.
Saratoga? Okay, not too far. And you guys heard about us on Meetup.com?
Yeah.
Okay.
Thought I signed up, but maybe not.
Okay. Well, hey, welcome. So I normally do these sessions once a week. I took a little break last week. Wow, there's not that
I
many
was
people.
planning to come 2 weeks ago, but then
Uh-huh.
just couldn't.
I got mixed up and came yesterday, I don't know what happened, that was me. And I was going, where is everybody? And then I went home and I was gonna write an email, and then I looked and went, oh, it's tomorrow.
Yeah, yeah, yeah. Well, to give you guys a little intro, for the most part, this is just a, I guess you could say an investment club that I just kind of do.
Those are moving averages, obviously.
Yeah, we got moving averages on. I try my best to discuss everything possible. We in the beginning we really did focus on stocks, but as things progressed, we talked about pretty much everything from commercial real estate cap rates to global
I
macro
used to be
stuff.
commercial real estate appraiser.
Appraiser? Okay, that's
So
cool.
I know what cap rates are.
Yeah. So right now, cap
That's
rates.
the ratio of the net income to the selling price.
Yeah, so cap rates right now are at all-time lows. If you look at the recent central bank financial stability report,
What is that? What name now?
cap rates, capitalization rates.
Okay.
It's another name for it is overall rate. It's the net income of
Thanks so
a
much,
building divided
Thanks
by the sales price, so it's a percentage, like 9% or 8% or something like
Oh wow.
that.
Okay, thanks so much. I think the wind probably.
So when, so we try to put the mat across it.
Okay.
Hopefully it won't close.
Okay.
Maybe I'll check in like 10 minutes.
Okay. Hey, thanks so much, guys.
My own.
Appreciate it.
My
Um,
Hi, I'm Chris.
so-
Good to meet you. Hi,
Lily,
Mayank.
nice to meet you, ma'am.
Same here.
Hi, Lily, N-I-L-I, Lily. What's your name?
Bob.
Bob, nice to meet you.
So I'll try my best today. So I'm kind of coming back from a vacation mode. I think a lot of people are as well. I'll try my best to just kind of give you an overview of what I'm seeing in the outlook for 2019. I am feeling significantly a lot more bearish through a few different types of indicators. Hey, welcome.
Hi.
Nice to meet you. I'm Kay. Feel free to sit anywhere. So
Would you like to do a round of introduction?
you want to do a round of introductions?
Maybe I.
We probably could. We got new faces and then
Oh, you meet.
maybe at the end if that's okay.
Okay, yeah.
I mean if you guys like. Okay, let's do it at the end then. So yeah, I feel a lot more bearish. If you look at it from a market technician's perspective, a lot of price areas have been violated, broken down moving averages and such. So they're looking pretty bearish. One source that I really look up is I haven't studied much, but wave theory analysis. Are you guys familiar with wave theory? Yeah, Elliott wave theory. So what I like to do is I call it my source. Say again? Yeah. So my source of outsourcing Elliott Wave is I use this guy right here, Tony Caldero. So he's proven to me to be quite credible. He actually, if you follow his blog, every week he does like an analysis on his version of Elliott Wave, and it's basically a very objective approach, meaning there's no subjective bias in it. What I noticed is that for the longest time he would do long term, over here midterm, and then short term, right? Like where he feels the general markets will be going. And believe it or not, I think around November time, I thought February, during February, when we had the market pullback in the S&P 500, he was still saying uptrend, right? And then right until around October, November, the markets dipped once again, and we had two volatility events for a year. He for the longest time, he decided to go probable downtrend. And now,
September, October is a standard dip time.
Yeah,
That's
yeah.
all.
So to me, it's this is like a really awesome free website just to track general market direction in terms of applying Elliott wave analysis. I know it a little bit, but not enough to maybe teach you guys at like a very advanced level, right? For me, I like to look at, I do a lot of intermarket analysis, so we look at bonds and gold and all that. But just wanted to share this resource with you because we're going to look at it a little bit later. Or maybe just, we won't look at too much, but keep in mind this is something to just get perspective on Elliott wave analysis. Why do I look at it? If you watch one of deleted videos that Paul Tudor Jones, you guys know Paul Tudor Jones, he's a hedge fund manager, Tudor Investments, billionaire. Well, let's look him up real quick. So Paul Tudor Jones, he actually has a documentary video. This gentleman right here, he's worth about 4.7 billion. Hey Kai, he has a documentary video called, I think it was called Trader, something like that. It's actually banned from the U.S., so you can't watch it anymore. But then,
Well,
yeah,
there's ways around it. You can.
yeah, you can go on YouTube and stuff. So it's kind of funny. I think he himself promoted the ban, meaning that he invested money into banning it because it was like a younger time of his where he was it showed a lot of ego and such. And so basically, in the video, you see him performing Elliott wave analysis. So pretty interesting, huh? To me, if a billionaire is doing that, then I want to do it too. Just like when we watched Real Vision, Stanley Druckenmiller, another billionaire, talking about price action, how when he feels the breakout, he would plow into the trade, in his own words. Those are some of the things that we want to learn from, right?
What's the name?
Stanley Druckenmiller. So that was in one of our. Are you here for the investment club? Always for the looking for the other person. Anyways, so that's Paul Tudor Jones. The other one is Stanley Druckenmiller. So Druckenmiller. So these are the hedge fund titans or people with that credible track record. It looks like you could listen to their interview right here. This is the interview. Might be even like unlocked now. They just really, I mean, they've been in the game for a while. So I most of my knowledge kind of derives from them. Like if I could grab an interview every now and then, just kind of hear the perspective. One gentleman I really respect and listen to a lot is Felix Zulauf. This guy's from, he's in the European area, but he's also a billionaire money manager. And the way he talks about just how the world works in terms of how we look at price in here, right? Price kind of reveals everything to you. So for like the past many weeks, you guys noticed that I would go to the futures, right? So this is finviz.com, and I'm using the elite version. Hey, welcome back. I'm using the elite version. Basically, I don't have any ads, and I get real-time data.
You have to pay for it, though, right?
Yeah, I pay $300 a year for it.
Mm-hmm.
The other resource I use just to
That's good.
Guru Focus. This is for deep fundamental analysis. Now, for the new people, I don't recommend. For you guys, you might want to start off with like investor relations pages. So let's say you find a stock you really like, this type of Workday investor relations. You get all the SEC filings. If not, you could go to the government database. So one is the company, the publicly traded companies database where you can get the information. So Apple, you can tap into their database, or you go to Edgar, which is the SEC's version, the government version, right? So for the new people, I'll just show real quick what does it look like. sec.gov/Edgar. Search your ticker symbol, and you can get your any 10K, 10Q reports. And if you want to be like Warren Buffett and just really understand business, which I enjoy doing. I like listening to earnings calls and presentations and all that because it gives you perspective of like what this specific industry, like the enterprise SaaS, enterprise software, how they view the world and all that. So I love listening to that. Also, if you listen to Facebook, Mark Zuckerberg talks from time to time. So you get to listen to someone who really manages billions of dollars and how they view the world or how they kind of capital manage things. But going back to it, so the way, when we listen to Stanley Druckenmiller, right, the way he analyzed prices, I found Finviz to be a very strong platform. I know Doris from, I never met Doris, she's from LA, she's online right now. She mentioned bar chart's a really good resource. I know I looked into it before, I just haven't.
This is better, I like Finviz.
You prefer Finviz? You use both?
For the screener and all that too.
Yeah, and then we also have JC in here, but he's online today. I think he's watching the playoffs or something. I'm not a sports person.
He's watching football.
Yeah, so JC, I know you're online. I apologize for not switching it over Saturday. It just seemed that we had too many people registered for Sunday. My schedule might be busy for Saturday as well. But anyways, he uses stock charts. And I know stock charts is stockcharts.com. It gives you a very long amount of data, which is really cool. So if you want to look at like the relationship between gold and the stock market over 30 years, I think stock charts might have that.
Bar chart is also very good, but that's
Yeah.
you pay for it.
Yeah, so that's so if I that's something we discuss. This club started evolving. We used to use Morningstar a lot too. I might come back to Morningstar when the markets are better. Right now, everything it's just kind of going down. So I don't know if I would want to create that excitement for you guys to go like, oh, I want to go long Microsoft in this really poor environment. But that's something to think about. Anyways, going back to this, so Finviz I really like because they really structured out like, just everything in general, right? You go to, I like to go to the futures tab and look at all the securities or all the futures contracts out there. But I like to segment it and mainly look at indices. Every day when I'm like looking at the markets, a quick look, I would just look at the dashboard right here. So as of last Friday, everything was green, right? But keep in mind, in a bear market, we would get like the biggest rips to the upside on the slightest good news, right? But we'll get a lot of down days. For the most part, we kind of have a confirmation of a bear market, though not all indices are in agreement yet, right? We got the Russell 2000, the small cap, the smaller businesses, it's already minus 20%, right? So that's confirmed bear market. But the indices bounced off the 20, like the S&P 500 bounced off the 20. We'll show you guys in that. We'll show you that in a bit. So it's not 100% confirmed. It's kind of like still in between for me right now. You looking for the entrance? It's over here. Welcome back. Anyways, going back to the indices. So to give you guys a quick, look around the world, right? You guys have to understand the way I view the world is that there's developed markets and emerging markets. Because we're gonna, in the beginning of the discussion today, I'm gonna talk about this right here, like projected returns for 2019. And you're gonna notice that this bar right here is gonna list different, this chart's gonna list different countries. On the right is emerging markets. On the left is developed markets. As you can see, the US, I'll make it bigger for people in the room. The US doesn't have that much return. This is a projected, and this was updated as of yesterday. Right? If you're curious about how they calculate it, we could get into the details maybe offline, or I'll send you the link and you could see how they calculate this data. But as of 1/5, as of yesterday, this is the projected or the 2019 outlook projected returns. So I saw over here China's pretty bullish, or emerging markets. Yeah, if they decide to start printing money again, that means the dollar value will go down. That'll benefit emerging markets. So that looks like that might be the case, because if we lower interest rates, meaning we print more money to juice the economy, then emerging markets are going to benefit from a lower dollar. So let's
raising interest rates.
They are, yeah. So the Feds have been acting very, well, it's mixed now, right? In the beginning, when the markets were kind of like holding up, they were very hawkish, but now it looks like they're very dovish. So I can't quite tell. I noticed that the markets will speculate, like interest rates were rising, right? Normally when interest rates rise, bond markets would fall.
Right.
But if you were tracking the bond markets let's say a few weeks back, you'll see that bonds were rallying. Look at this. So it's odd, right? So they're raising interest rates, but the markets are speculating.
But they're not gonna keep doing it.
Yeah. So that's where I love to find those key divergences in the markets. Because normally when you raise interest rates, they have an inverse relationship. Bonds will go down. But in this case, there's a lot of fear, and we're raising interest rates, but they're still plowing the bonds. So that's telling me something different. And so that's why I kind of switched my 401k, kind of focus on bonds right now, bonds and cash or money markets. Just because it seems like, well, maybe I'll speculate the bond trade. But there is this one chart that I shared with everyone in the group chat that I really like. And this is from a gentleman that JC found, Kimball Solutions, Charting Solutions. So if you look at this chart right here, I saw this Twitter post. That's why I wanted to post it. So above is the 5-year Treasury yield, right? And then below is the, I can't even see it. This should be the S&P 500.
It is.
Yeah, it looks like it. I just want to make sure. Yeah, S&P 500, so 5-year yield. So it looks like we're reaching this line right here, right? So if yields are going down, it's kind of respecting this chart. What am I trying to say right now? So if they're expecting to raise interest rates, but it rose to this area, now it's hitting resistance, now it's going down, bond prices are going up. So it's interesting to see that on one side, the common thinking is that if interest rates go up, bond prices go down, right? But then the markets are speculating something else. So that's where I think this is where like you kind of have to practice, and over time you see the divergence, right? That key indication, like something's going on. Why are people running the bonds in a rising interest rate environment? So something's up in the air. Now another way, you guys already know, another key thing that I use is, let's say when the S&P 500 is pulling down, like down 5%, but I got like a stock like Workday up 5%, that's another like indication of like, okay, we should consider this stock when the market recovers, right? Because it's not
Doing
going
well
with the
in
market.
that market.
Exactly. So those are some relative things you want to look out for. But anyways, going back to just analyzing around the world, that's the bond market. For the past 2 months, it looks like the bonds have just been rallying. It's been interest rates are going up, but they've been speculating lower interest rates. So what do you guys think?
Is it because they're afraid of the
I think because the market's pulled back so hard, this is like natural run to the dollar. Hey, bro, run to the dollar and then run to bonds, right? So you gotta think about this as a global game. There's other major DMs. So going back to what we're saying, there's DMs and EMs. DMs is developed markets. Understand that when I say developed markets, it's, do I have that Wikipedia page? Actually, let's do this.
You're trying to buy those reverse ETFs.
Yeah, but I mean, there's a reason why we're considered developed markets, right? There's a categorization to it. So this is GDP in trillion USD of largest economy. So USA is number 1, China's number 2, Japan. We track Japan, right? We look at the Nikkei. We track Germany, right? We look at the DAX, UK, FTSE, Brazil, France. Well, we look at the European indices as well. So that's why I really like FinViz. Not trying to pitch it to you guys, but just showing you how I use it as a tool to get a very general landscape of what's going on in the markets. Yeah, I was gonna annotate it real quick. So what I have right here is the daily chart. You can't see it because I kind of scrolled down, but normally I look at it in this kind of framework or this kind of process. So my process A, let's say, I look at USA. So this area that I circle is USA. Dow Jones, S&P 500, NASDAQ, and then Russell 2000. These are all names that you guys should be, well, I shouldn't say should be, or are American names that people are familiar with, right? And so, have we met before? I feel like, no? Okay, well, hey, nice to meet you. I see a lot of familiar faces these days. I apologize if I, if I ask those questions, but anyways, looking at the USA markets, just, I like to use simple analysis. I see that majority are just pointing down, and that tends to be the trend. You don't have to use advanced analysis to like, just to, I guess if you want to use advanced analysis, you're more of a shorter term trader, but this is just like a general investor like feel. So for the most part, USA markets are pointing down, right? Now moving over to the other DMs, we're not the only DM. There's Japan. Looking at Japan right here, Nikkei, also pointing down, right? Now looking over in the European area, down, and then down, right? Stocks 50, DAX, they're both pointing down. So major economies are pointing down right now. If you want the quantified amount as to, hey, welcome, as to how much they're pointing down, I kind of put it over here. So they're pointing down, let's see, right here. So S&P 500, all right, these are most recent numbers, down 15%. It was down 20% at one point. That was the point where I was like, oh, shoot. This might be an interesting, turning point, or who knows. NASDAQ, 16%.
Is it from the highs?
Yeah, so from the high, right? So this year is going to be a very interesting year. Normally, in like 2017, or was it 2016? I forget now. We had a very like trendy environment. Everything was just going up. So 2017. No, it was 2016. I forget.
17 is pretty good.
Let me look at the chart real quick. I'm recovering from vacation, so I apologize. This year here. So this year was a nice year. Things just kind of kept trending up. So normally, what we were discussing earlier, what type of trader am I? Momentum trader. So I love these type of environments where things just kind of keep going up, and you kind of sit back and buy the breakouts, and it's pretty. I wouldn't say easy. It's easier, right? Because people can't buy when things are like I'm looking at gold, right? And gold's bottoming, but I'm talking to some people who are like, well, it kind of left already. Well, I'm looking at a bigger picture that it could go even higher because of printing of money. But anyways, I prefer this environment. It's easier. This new environment has changed. I don't know. You just I have to cut my losses more. I mean, I lose money too. I don't always make money, but that's why I teach, so I could become better at this. So I hope to, share with everyone. Anyways, hey, welcome. I didn't get to say hi, but welcome. Dow Jones down 12%, right? So not too bad. Recovered a little bit. Russell 2000, IWM. Keep in mind, I'm using ETFs. These are ETFs. You can use the actual index, but I just use the ETF. It's supposed to track it with some accuracy. But Russell 2000 down 20%. And I'm going to say again, okay? I've been telling the people like all year long, for like 2 years maybe. This is, well, okay, hold up. back off a little bit. Today's my technical discussion number 100.
Yay!
Crazy, right?
Congratulations, yay!
Yeah. So I've been doing this for 2 years. So in 1 year I could do 50 meetups because that's just what it allows. My time allows me. So today's number 100. I'm just gonna treat it like another day. I did think about buying you guys shirts and put like Volatility Club and hand it out. But I know we got some new faces. So welcome, guys. Nothing too special, I guess. Just another day, I hope. But I am recovering from vacation. If you guys have any questions, or I get kind of nervous when people are like, "Hey, good job" and stuff. If you have any questions, we can chat after. Anyways, going back to this. So, IWM down 20%. Looking at Nikkei now, moving across the world to Asia, or at least one of the majors in Asia. Japan down 19%. Right? What do you think of that? That's close to 20%. Europe, stocks 50. European area, down 17%, right? German DAX, down 20%. Germany's a major economy. They're down 20%. And, if you understand, getting sick and then getting someone else sick, this spillover effect, same scenario, right? You look at the Hang Seng, down 22%. This is more of an emerging market. This is more China, right? I included because when we went down here, China's oh no, I lost my chart. China's number 2, right, in terms of GDP, right there. So yes, even though it's categorized as an EM, it's still important due to its size. And then the Shanghai index down 29%. Scary stuff.
This is only because of the dollar not breaking down, right? That's why the emerging markets are breaking. Dollar's going up. The Dixie index, if you check.
So let's take a step back as to why the dollar goes up. There's many reasons, right? Like, why would you demand more dollars?
Right.
Interest rates are going up,
Right.
right? So if the dollar is paying a higher interest, and you live over in Japan or Shanghai or European
Yeah,
or
you
Europe,
convert it into
you're like, hey, I'm kind of scared because my European markets or my Germany DAX, my German market's down 20%. Ooh, looks kind of scary, and U.S. dollar's paying more. Okay, out of fear and out of higher interest, you're gonna run to the dollar, right? But as we run to the dollar,
the emerging markets.
the emerging markets keep going down
Yeah,
because you're also exiting the emerging markets,
Right.
but you're also putting pressure on that as well. You gotta,
Another thing is, if you watch how fast we're inflating the dollar versus how fast other
Yeah.
countries are inflating their currency,
yeah,
if they're inflating it even faster, more of a long-term indicator, that would mean we're going, even though our dollar will get weaker, theirs will get weaker faster.
yeah. So yes, so you're asking, your question was why the global pullback, right? I hope to communicate just now in the past 5 minutes that it's not just the USA pulling back. It's not a scenario where I'm like, oh, it's just USA pulling back. Europe and Japan's still okay.
The dollar should break down at some point and the emerging markets recover.
Yeah. So I think emerging markets will recover first if the dollar, if they start printing money. Yeah. So I think, if you think about it hard enough, and if I were to draw out some things again, but it might be redundant for some people online, but basically how money is printed, if I were to draw out how the contracts move, and I kind of see why, the central banks want, or why some parties want a higher dollar to sell a contract for more money. It's very complex in thinking. Should I break it down to you guys? It's a little bit of a repeat. I could draw it out, how the money printing process works. Sorry. People online, are you guys okay? It's not too laggy, is it? I'm gonna do one quick repeat concept. Yeah, so Tim, let me know if it keeps lagging, if you lag out.
Where you get this result? Where did you get this chart? Is that your
This is from Guru Focus. So Guru Focus is the one I pay, about $800 for a year. So they give me the 30 years of financial data
So
and
how
other
do
stuff.
they come with this one?
This one right here. So
Yeah.
I don't know if you.
Provided it is
Yeah,
not
so I don't know if you came in. I said we could talk about how they got that data offline, but that would be, let's see, where did I put it? So we could talk about offline because I don't want to jump into how they jumped the numbers, but this is how they got the numbers right here. Yeah, so if you come from a data background and you start seeing charts, you want to understand how the data. That's very good. That's a strong skill set to have because you always want to question the data you receive, right? But anyways, what was I saying before?
There you go, right? On the right side, you have the emerging
Yeah,
So in
yeah.
a
Oh,
recession scenario,
Yeah.
I think it's only gonna be US localized recession,
yeah.
right?
Yeah, so I was going to repeat this powerful framework concept in my head. I know some people online or people already saw it, but we do have some new people, and I figure we're already talking about inflation, and it's a very strong concept to know, so we're going to talk about it. And I always use that same example, as you guys know. You guys remember VRX? VRX was a pharmaceutical company, right? That went really high, right? It was in the billions. I think I don't remember how big.
There's a Netflix episode on it.
Those are always scary because you don't know whether you're gonna have something approved or denied. All of a sudden there's a drastic.
Well, this was a little bit different. This one was associated with some illegal activity. I'm going to show you what the illegal activity was. It was more of a ghost entity absorbing losses, right? So if a ghost entity is absorbing losses, then that means another entity is absorbing a gain, right? And so when I show you that and I demonstrate the central bank system, you're like, huh, oh shoot. They're applying the same, dynamics to achieve growth, which is kind of weird, right? But if you understand the central bank structure, the very biggest bank of all, the central bank's bank is the Bank of International Settlement. So I haven't studied that high. I'm aware they're there, but I only look at central banks around the world. So like the ECB, the BOJ, the Fed, right? But I use this example. So LLC1, LLC2, right? So LLC1 will make money, right? The money will go up. But over here, this LLC will accumulate expense. Ooh, this should be up. Sorry about that. So as this one is going down in value, this one's going up in value, right? Because this one's sending money over. But that's what happened to VRX. There was an article posted by Citron Research, who's a famous short seller. And I read the whole thing, and he was talking about how they had a ghost entity that none of the public investors knew about, but they were sending them money, juicing the returns, juicing the numbers.
And there's
Right.
a Netflix episode about it.
There's a Netflix. Oh, there is. Oh,
There's a
dude,
full-
you gotta send that to me then. I wanna. Well, what's it called? If you know.
I'll send you.
Okay. Cool. So now, what if I just change this for a second? Because I explained it quickly, right? I just changed this from LLC1. I erased LLC2 and I changed it to government 1 and central bank, but we'll put Fed to make it easier. What am I doing right here? Right? Now, besides accumulating expenses, it's not accumulating expenses. What are they accumulating? They're accumulating assets. What are the assets? Treasuries, right? Because when the government needs more money, when they can't tax us enough, they need to sell contracts, right? Sell premium, sell option contracts or whatever. So they send the contracts over here, right? So treasuries go over here, and in return, money goes over here. So they finance without, waiting for you to transact. Because every time we transact, we shake hands like, oh, we do a deal, we pay taxes, right? Corporate taxes, sales tax, capital gains tax, whatever tax. But now they could take money without even a transaction.
Now the deficit goes up.
Yeah, so this is a very valuable concept because when I analyze it further, it really builds up the investment thesis for gold, right? Because the systems if you were to not stress test the banking system, but stress test the never before printed levels of money, gold makes a lot of sense. And I hope I don't sound like a gold guru or freak in like the past 3 weeks, but in the past 3 to 4 weeks, gold has been performing. I've been looking at gold a lot. Normally, again, I'm normally a software investor. I like software stocks because they're high margins. But for now, it's just some of the big gurus or some of the big money managers that I follow are the ones I really respect. Some of them are calling some ridiculous stuff like buying puts on Microsoft. I'm normally a bullish person on Microsoft, but some people I respect are talking about puts on Microsoft. I don't even think I want to play right now because I can't tell. If I do play, it's gonna be a quick trade, right? Some of them are talking about puts on Salesforce too. Salesforce is like one of my #1 favorite stocks. Yeah, because they're that fearful. So I'll take a step back. I probably don't agree with that. Those puts on Salesforce and Microsoft. I agree with puts on Tesla. And again, guys, this is just for educational purposes, okay? The issue, I don't want to, you guys get mad at me for losing money, but it helps with the discussion, right? If we bring in people who know stuff, Because we don't all know everything. So if we could bounce ideas, that'd be great. Puts on Tesla makes sense because they're a very low margin business. They're about 17%, I think, gross margin, and then they're netting nothing. So they're losing a lot of
They
money.
were being subsidized.
Yeah, yeah, and so, but then you gotta think about this, right? How does margin expand and how does margin reduce? And for those of you who don't know margin is basically for every $100 you sell, let's say you make $90, you got 90% margin, right? Margins will shrink. Yeah, so we use the Apple example. We're gonna go back to this treasury example real quick. But Apple right now is, this is why I draw for Apple. Basically, they're continuing to charge higher prices, right? Prices are going up, but technology cost is going down. Their expense, the hardware expense, right? So their margins right here in between is expanding, as you can see, right? Can they keep ripping us off? I don't know, maybe, right? They got that influence with the marketing. Sometimes marketing justifies a higher cost. I don't know why we pay for that stuff, but you know, we're
It's not
emotional
happening
creatures,
anymore.
right?
It's not happening anymore.
Yeah, they're hiding their unit sales, which is a major indication of, like, you know, a reduction in consumer consumption.
Because consumers not really spending
Yeah.
$1,000 phone, right?
Well, yeah. I mean, I did, but like
A lot of people aren't.
yeah, I think a lot of people won't. A lot of people in China are not buying, you know, these high-end
Because
phones.
the Android phones are as
They're cheaper and they're just as good.
1/3
Yeah,
the cost.
it's just you. I just think you know, for the USA economy specifically, I think it operates better on Apple, but that might be a very biased opinion, right? So I'm not gonna jump into that. But anyways, the point is, okay, how can, you know, how can they keep charging a higher price for a phone when the cost of technology is reducing, therefore sustaining their higher margins? They're making more money every day, but I don't think this is sustainable. I think in the future, one's gonna have to give, and I think the premium charging is gonna have to give, right? Because they said they didn't do so well in China.
Yeah, it's already happening, right?
It's already
They have
happening, yeah.
offers out and stuff.
And that's why, you know, you look at Apple right now, it's down 39%, or was it 38%?
There's
It's
just one
ridiculous.
caveat with this, the expenses are not really going down as the technology is going down because of 7 nanometer and stuff.
Yeah,
But, yeah.
yeah, I hope we don't digress too far, because we're already on the topic of Apple. I wanna show you this interesting chart that I showed to the people in the chat. You won't see it on the daily, so you have to flip over to the weekly chart, right? Now, weekly's a lot bigger perspective, right? This is what I showed to the people in the chat, because this is what I'm seeing. For the longest time, I think even longer than this, for many years, Apple has respected the 200-day moving average on the weekly chart.
Is the pink one 200?
Yes, the pink one is my 200. I apologize if it's really small or blurry. But it's very fascinating that I think it's there right now, educational purposes only. There's a quick trade for Apple, because if you look at right here, the 200-day was respected. You look at right here, respected again, and where are we today, right? So it's testing right now. I would anticipate some bounce around here. I think we're gonna have some resistance, and the markets are quite oversold as well. I think markets will bounce, causing Apple to go up as well, right? So if you want to do a quick trade, you know, like.
This is it.
Yeah. No, I'm not recommending though. It's just
If you draw a straight line,
yeah. Yeah.
connecting those
Yeah.
lines, I still think there's
You know-
some room to drop.
Yeah.
But yeah, maybe it's just parabolic.
You know, if I were to draw it out, we would have like a broadening up, rising broadening wedge, right? That's kind of bearish, but
No,
that's a
well,
little
yeah,
that's a little too deep of
higher
analysis.
quality.
So that's what I'm seeing for Apple. Apple 40% down. You got the company that used to be 1.1 trillion in total value right across the street,
Right.
with a strong balance sheet, now down 40%.
I think
It
600
sounds very attractive, and you say again?
600 billion now, right?
Yeah. Well, is it 600 billion now? That'd be crazy.
700-ish.
I think it's 7 maybe. Let's look at it.
Microsoft-
It's 722.
That makes more sense.
Yeah. So that's a lot of money that just got evaporated, right? But anyways, I think, personally for me, I think, do you trust the person on the other side? What drives the market? Greed and fear, right? So because it's down 40%, I think greed will carry it up, right? And then fear will take it back down.
Exactly.
That's my opinion. So can you capitalize that? Because this time only moves forward, right? If it's gonna go up for that little bit, if you're an active trader, well, it's up to you to capture that return or not.
Well, if Warren Buffett actually buy more, because he say that if the Apple stock decrease increase 10%, he would definitely buy more. But did
That's,
he actually do that?
yeah, that's what we'll find out in like
So-
February.
Yeah. So we could look at his, we could look at his,
Because of 13 apps that get released by Berkshire Hathaway.
yeah, so that's his quarter position. It's his biggest position.
He
So
has 252 million shares, I think.
yeah, I'll show you right now. So this is his live portfolio. Wait, no, this is not it.
Live.
It's 1 month lag though. So it's live with 1 month lag. Because look, if you're a money manager, yes, if you accumulate a large position, you have to disclose, but you don't have to disclose right away. There's a process to disclosing with the SEC, right? So this is probably the soonest you could get for the data.
Oh, this is awesome.
Let's see, Warren Buffett portfolio right here. So this is the portfolio. Apple is about this size right here.
I think it's 21% or something.
Yeah, 25.79% of his total portfolio.
Is that biggest circle over?
That's the biggest
left?
Yeah, this is Apple right here. So this is Warren Buffett's portfolio, followed by Wells Fargo, Coca-Cola. Now, keep in mind, he's a long-term investor,
Yeah,
right?
like
He,
5 to 20.
you know, yeah, he doesn't matter if he's down right now. He's gonna eat the balance sheet because they have a strong balance sheet. He's gonna eat it. He's gonna wait until dividends. I never check Apple dividends because I focus on the yeah. So he's focusing. He doesn't care, in my opinion. He could be down, but he knows that there's money to eat, right? And they're gonna do whatever it takes. I personally think Apple will evolve into a software company. Is that provocative to say?
Services, more like services. Yeah.
Software services.
Services.
Well, to some degree, yeah.
How services as in individuals meeting and then servicing, like
No,
IT servicing,
no,
or
like iTunes and then.
so that's to me is I categorize as software subscriptions, right? Subscriptions
Yeah.
categorized as software or like a cloud model. So I think they'll evolve into that.
Content based.
Yeah, because it's just
Pretty
leaner.
fast.
It's just leaner. I think they'll jump into Netflix, territory. I had one theory that they would acquire Yelp.
There's
Just
a
because-
ridiculous CNBC article today that they can buy Tesla or they can buy
Yeah.
Salesforce.
So yeah, so that's why I think 40% down, thinking about what they could acquire. They could acquire for growth, right? One stock that I'm extremely bullish on, but maybe not right now, is BlackBerry. People are like, oh, BlackBerry, the phone company. Well, so if you read the history, we talked about this investment thesis already. BlackBerry right now is operated by John Chen. John Chen used to be at Sybase. Sybase was a company he flipped and sold to SAP, which is about a $200 billion enterprise. Now he's at BlackBerry, and he turned BlackBerry. BlackBerry used to be 80-20, 80% hardware, 20% software. Today, BlackBerry is 20% hardware, 80% software, with a gross margin of 74%, if I recall. So this is BlackBerry right here. Gross margin 76%. Every $100 BlackBerry sells, they make $76. And who are their clientele? Who used to use their phones? Presidents, right? Politicians used to use their phones. So they're going to tap into that existing client base. They have a strong install base. So now they're selling software to governments. I mean, at least like, hey, we used to sell you phones, but now we got software, right? So he's there for a reason. And we investigated this investment thesis already because Prem Watsa, a billionaire from Canada, this is Prem Watsa over here. He's worth about 2.3 billion. He bet a quarter of his net worth into BlackBerry. Yeah. So this is Prem Watsa right here, right? He's worth about 2.3 billion. Right now his portfolio, this specific one, is only 1.71. But look at the shares that he has over here, or look at the size. He's betting about 31% of his portfolio on BlackBerry. Hey, pull up a BlackBerry investors relation. You'd be pretty fascinated. But right now, again, as much as I like it, the market environment doesn't allow me to take my gains. So my contracts, if I have option contracts on these are actually 2 years out. two year out contracts. And if it expires, I'll probably exercise at a loss just to take the shares. If that kind of makes sense. But I'm paying the premium to cop it now, right? Anyways, but that's the BlackBerry play. I think this could be a significant big win in the next super cycle, right? If we have a down cycle right now, it will drag every stock. It doesn't matter what stock we talk about, even Apple, right? Anyways, so projected returns. Let's go back to today's number 100 discussion. So projected returns, China. What do you guys think? Emerging markets. I think at this point, emerging markets got beat down. So China, Russia, India, Brazil, all that, they got some substantial tailwind if the dollar goes down. So the key thing to watch right now is UUP, or the dollar index to go down. Yeah.
Because I'm from China and know what's going on in China.
Yeah.
Last year it was the worst. All the internet startups.
Yeah.
It was so hot, but then they're laying off.
Yeah.
Tremendously. And now the government is already doing something about it. They're releasing more reservoir.
Raising more.
The percentage of the deposit rate.
Yeah.
So they're already doing something, and then Chinese economy is could be highly manipulated by the government.
Yep. So, oh man, I do apologize for all the. Well, we could extend today's discussion. We could probably go through. It's normally 2 hours. I'll probably do 3 hours, just because it's number 100, and I got no open house today. So it's a rainy day. Who's gonna do the open house? I'm gonna. This one's gonna be a longer discussion. So we got a lot of new faces in here, and so I wanna give a chance to show everyone these really fascinating charts and stuff, but also push new content to share with you guys. Basically, we listened to, I think you know this gentleman, but he's known as Miles Kwok. He has a Chinese name I can't pronounce. Right, but it's just that one chart. What we learned is that China's economy was very manipulated. They locked up the economy and started printing a lot of money, right, and not let you exit from that. And so they really devalued the monetary base. So this gentleman right here, I think you know.
Yeah, I know.
Yeah. So he talked about a lot of speculative stuff, but I'm not going to talk about that. I'm not a politics guy. I'm more of a money manager focused type of interest. But anyways, this is my favorite scene, and I'll play it again, just because it's.
And as a percent, as call it.
So basically, he demonstrates through this
Was
chart
the
right
chart
here.
of Chinese M2
So-
the moving?
Let me pause it right here. So, sorry, I'm waiting for the thing to clear up. So at the top right here, I'll put my mouse right here. The national GDP, right? So GDP will grow with the currency supply. I think it would have been better if they put the currency supply right under. But anyways, national GDP. That's basically let's just say your income, right? Your income will grow as money comes in more. So over here is the money supply. So what happens is you're going to see the USA, the money supply will grow, but the USA will grow more. Their GDP will grow more than the money supply, okay? But China, their money supply grew more than their GDP. So even that they printed so much money, the GDP didn't grow. That's a problem. And so it's kind of interesting just listening to this. So I'm going to play it, share it with you guys, and then let me know if you have comments.
China
Internal
in
development.
dollars is external.
Yeah.
And they're desperately in need of dollars because that's how they trade with the rest of the world.
Mm-hmm.
What was so compelling when I met you, the most compelling thing that you showed me was the chart of Chinese M2, the moving graphic.
Yes.
And we'll provide that moving graphic to the Real Vision audience separately in this video. But more importantly, Chinese M2 has grown
You notice that?
from $1 trillion worth of RMB
Yeah.
to, as you say, $30 trillion on an economy of 12.
So you notice how the national GDP, the top one, for the USA, the blue bar, is bigger than the money supply. But China, the money supply is bigger than the GDP. Right? We print money to get more GDP, essentially. But that's not working for them. Something's going on. Is what
Yeah.
they notice.
They've printed more money internally
Yeah.
than any one country in the history of the world as a percentage of GDP.
Yeah.
And as a percent, as call it M2 growth versus GDP growth, nothing has ever come that close.
Yeah.
So they've created a false economy of
Yeah.
RMB and the exchange rate in dollars. So you
So the interesting part that I noticed was that if you look at this PowerPoint or these charts that I have right here, I like to use this example, and I teach it a lot. What I noticed is that, now look at this right here. So change in gold reserves, right? Right here you have China and Russia in 2017. So on one end, on one front, they printed a lot of money. Behind them, they started buying a lot of gold. So that's why I'm betting on this gold trade. I want to bet with a sovereign, right? If a sovereign's bullish, I want to be bullish too. Because at the end of the day, remember, they got the guns and all that. That's what we really listen to. But is that kind of in line with what you know, or do you have a comment, Bob?
It's a side issue. A lot of the ingots they got that were minted back in like late 80s or 1990 or something like that, at tungsten cores, they got cheated.
Oh, really? Oh, wow.
Tungsten's the only metal that's as heavy as gold.
So for me personally, I'm looking at gold miners, just because there's a more leverage aspect to it. And we'll talk about the securities today. I have it at the bottom. And then I just did a little quick technical analysis on so these are the gold stocks that I'm looking at, like AGI, AEM, KL, PBG. A new one I'm looking at is gold, right? This one gapped down really hard from 83 to whatever, $13. But it's not because of anything company specific. It's more of a mergers and acquisition scenario, so they got acquired. But it's looking attractive. But before we go that far, let's jump back to what we're going to talk about today, which is 2019 outlook, where we are at today. Any questions so far before we go on? You guys understand emerging economies and developed markets and all that? Okay. Real quick, going back to the central bank one, right? What we talked about earlier. Did you guys understand what I was going at with the whole ghost entity? How we have a government entity that says they don't operate, with the feds, but yet, you see all these Trump tweets about, hey, the Fed's raising rates too fast. It's going to make me look bad, essentially is what he's saying. And you could probably backtest that and go to my Twitter feed over here and just see what was he talking about, right? I probably can't find it, but you guys should go on Twitter and just follow him and just read what he says, because he seems to move the markets.
There's a long history of the Fed not reacting soon enough and then overreacting when they do.
Yeah.
That's what happened in Janet.
Bob, before you go today, maybe I could share with you these charts. I could send it to you. It talks about this. I really like this stuff right here. It talks about how 16 of the last 19 interest rate raises, whatever, cause recessions. And they have charts to prove it. This is the one right here. In the past 100 years, 16 out of the 19 rate hike cycles were followed by recessions. Very, very extremely fascinating. So I think the probability stays on our side if we look at the markets today, how just every market around the world is kind of inflated, and then they're cutting back the money printing across the world. It'd be interesting to see how things turn out. I'll gladly share if you want. Anyways, 2018 December performance. You guys noticed that there wasn't really a Santa rally before Christmas. There was one after Christmas, but not one before Christmas. So this to me is potentially signaling something big here, because normally when I'm looking at markets around December, there's a nice little bounce, little rally.
Do you watch quarterly charts? I'm talking about quarterly, not monthly. Yeah, it bounced from the MA quarterly. Should maybe check that. That's why it bounced, I think.
Quarterly would be so you put 3 months,
Yeah.
like a 3-month chart. Yeah, I don't look at the 3-month. I could though. I mean, after.
Get it on fingers, but
Yeah, after some point, it's just they all provide the same information. It's just what time frame are you operating in is more important. So I tend to operate in the daily, but I'll look at them weekly and monthly just to kind of confirm what other macro managers are seeing. Though we did rally a little bit after Christmas and establishing some V bottoms. So I want to demonstrate what V bottoms look like across indices, which means a potential short-term reversal. Below are some images, examples of how I identify V bottoms. You see this in stocks, right? If you look at the markets long enough. But this is what a V bottom looks like. And I think it'll hit some resistance at the 20 MA, if not the 50 MA, right? But we'll see. I think Friday's rally was just like a impulsive move to the upside.
yeah.
We'll see though.
I didn't really say anything different. It was just the markets reacting.
Yeah, I think there's only one thing that could save the markets right now, in my opinion. Can anyone guess what it is?
Earnings.
No.
Oh,
Like collective earnings?
the
Maybe.
Trade stuff and the shutdown, both of them.
No. Well, yes, a little bit, but I think there's a bigger thing that could save the markets.
Trump.
No. I don't know about that one, but I'm staying away from politics. I think the big thing is if around the world the major DMs or NEMs decide to print money like crazy. Everyone just agree to keep pushing the system to its limits.
Provide some stimulus on Friday. Wasn't there news that came out?
I didn't check that news, so I wouldn't know. Maybe if you could share with me. But S&P 500, this is what it looks like for a V bottom, and then some resistance at the 20 MA. Technical analysis can get very boring if you kind of just look at it over and over and share it, I realize. But let me know if you want me to go a little bit deeper, okay? So we had a breakdown at the 260 right here. So further confirmation of downside. And now we have like a large high volume V bottom, signaling to me that, hey, there's some greed action here. People want to buy, maybe a reversal. Then if you want to do quick trades, right? Because whatever the indices do, it kind of affects your trades. So that's why I follow the indices. But also, it's just super interesting. Next one is QQQ, NASDAQ. This is what it looks like. Also V bottom. As you notice, it's not just one index that's having a V bottom. It's multiple indices. But again, it's going to be testing the 20 MA, which is my green line, and the 50 MA. Those are the next resistance that I'm looking to eye, see how that goes. Dow Jones Industrial Average, same thing. Another V bottom right here. It's like a sharper bottom versus like a U bottom, right? This one's more like, oh, we're not comfortable at that price level. We'll go back up, like a sharp bounce back up. Hey, Joe.
I have a quick question.
Yeah.
When you're in the V bottom, like when you're going down, how would somebody ascertain that when it would start reversing up? Because if
You would probably have to watch it like a hawk on the daily chart. I'm sorry, on the intraday chart, and just see if there's like volume buying action. We could do that by. I don't talk about day trading much in here, though I'm like kind of working on getting back into focusing on day trading more, just because the environment's not that great. But to detect it, we would go down. We'll shrink down to a closer time frame, and just see the action on Friday right here. Let's do down to 3 minutes on Friday, right? So this is the 3 minute right here. So I have my opening range breakout. Well, I mean, anything like this right here, I see a breakout right here, then a lot on super high volume right here. The way I trade on the daily is pretty similar on like an intraday, right? So it'd be tough for a lot of people, but I would buy right here. Just buy it, man, right? Buy it and then see where it goes, and then the quick retrace right here, and then see where it wants to go next, right? But this is because I know the bigger picture is deeply oversold, right? It's been down like 20%. So that's how I look at it from a very specific close-up view. IWM, Russell 2000, the smaller businesses, the small caps. Again, 20 MA resistance, V bottom right here. What do you guys see? You guys see a pattern on IWM? Just like a quick test. Do we have a bear pennant? See that? I should draw it. Right? So this typically indicates further downside. Right? We got the pole.
Oh, bear flag.
Yeah, bear flag. Flag or pennant. These days I don't care too much about defining the differences, but pennant is just kind of like more pointy.
Yeah.
Flag is more rectangular.
Pennant's more sideways.
Yeah. So checking on this, I think I still think further downside. So if it plays out that resistance right there, or right there, 20 and 50 MA is what I'm looking at. So if you notice like how you trade on the front side or on the bullish side, it's the same way reverting to the downside. It's just maybe you could flip your charts, set up the charts and just flip upside down, and then you're still playing the same direction you always play, but it's just a different way to look at it. I was gonna talk about this, but I did in the beginning already. Just sharing with you like the last month's performance. It's been pretty bad, December's performance, and lack of a Santa rally. To me, is signaling something else, and also the famous NVIDIA chart that I'm going to show for the new people in here, because this chart to me speaks a lot. So this is NVIDIA right now. I had a gentleman that I know. He's like, "Hey, I want to buy NVIDIA right now." I told him, "Hey, well, you back test that thing. You might want to wait a little bit longer." I don't know why my annotation is not coming up, but I have it right here.
what group is that?
This is just a group chat that we have. In the beginning, one of the people that came asked me to start a group chat and kind of just stuck with us. I'm just going to show you the NVIDIA chart real quick. Oh boy. I don't have it. My annotation's not showing up. Okay, well what I wanted to show you basically, if I were to measure it, right? From here to here is about 55%, right? So we'll measure it. So from top to bottom, you see that 54.89%? That's where we are today, right? That's where we are today. But if you back test it from over here, from 2001's bear market, you back test from right there to down below, it would drop about 90%, right? And then you back test 2008, it was 85%. I had a cleaner chart, and that's why I want to show you it.
That's almost like crypto.
Yeah, so this is 2008. So NVIDIA has a tendency to drop like 80%. So that's probably when I'll look at NVIDIA, not now. I wouldn't look at 55%. 55% is already like, you know, I think the crowd just decided it's going to go down.
No, but you can't, I mean, the thing is that nature has changed, right? There's some
The nature has
people-
changed.
I would say 50% retracement is good. But
Yeah,
it does look a little scary when monthly 3 candles are like crazy.
Yeah, if you guys, for the people who come in here quite a bit, you guys remember me drawing the infrastructure line, right? So there's this line, and this is like the current price line, the spot price or whatever. But then there's always the infrastructure line. The infrastructure line is just basically telling me like, you could apply this line to anything, right? Like for example, cryptocurrencies, right? Let's say this is the infrastructure line. This is like how much real development there is for cryptocurrency to be used as a currency. But this is where the market's pricing it, right? So there's that premium value. Yeah, yeah. And so I want to apply the same thinking to the money supply. I think the infrastructure money supply is a lot higher than before, right? But also there's a lot more population than 10 years ago, right? We can look at population growth, which was the next topic that we're going to talk about. So another website I use that I recommend everyone use, it's called multiple.com. It's free. And we used it in the past to look at the Shiller price index or PE ratio. Oh, not this one. Right, now we're not just going to look at the PE ratio. We are, but I'm going to show you that there's a wealth of information for free, right? For Bernard, he's not in here today. He always asks about earnings, right? You could check out the earnings chart right here, S&P 500 earnings. Where are we at today? Earnings are going up, right? That's kind of nice. And there's other economic data, as in like CPI. What's inflation look like? We printed money all along. Yeah, that's just how the world works. I figure, you know, if I ask one of you guys in here, or anyone in here, to run your own empire and care for your people, and the main thing, you know, one of the infrastructure you have to build out besides the legal system, right? How you guys do deals, shake hands with each other, is the money supply, or yes, the money supply. How do you adjust the money supply? Do you choose to adjust the money supply, or do you keep it at a fixed value? Right? Are you going to use stones as your currencies? Huge, giant stones? They actually did that. Or ancient Chinese knives as your currency? Or are you going to like do like, I don't know, digital currency and print it? What would you do if I asked you that? Anyone want to take a shot? It's just like putting yourself in a politician's shoes.
Well, the market can grow without the currency going up. It would mean prices would go down though. Because there'd be the same number of dollars chasing more goods.
Yeah.
So,
Yeah. So if people start, you know, the population grows, there's a limited amount of dollar supply. So it seems that by nature we need inflation. But that's like that's so philosophical. This is like all like monetary philosophy at this point. Monetary system philosophy. Anyway, did you have a comment?
Yeah, I'm just saying digital, maybe,
Digital?
because it's easier to.
And you would use like a blockchain algo to control the inflation?
Yeah, you could
Yeah.
change the dynamics at any time.
Yeah. But who has the power to do that? Well, probably, would you decentralize it or centralize it? Sorry, we're going off topic. Anyways, let's let's go back to this over here. So, market tech, let's see. So yeah, I wanted to point this out. The one thing that can save the markets here is if there's a massive QE action across the board, across the economies, right? I think the next few rallies we're gonna dip. But anyways, wave theory analysis. He continues to feel downtrend probable for the long term. Midterms already confirmed downtrend, and you guys could look at it yourselves. but I'll skip ahead over here. Valuation multiples is what I want to talk about next, and that's the multiple website. I wanted to point out the PE ratio. You guys understand the PE ratio? It's the cap rate upside down, right? Cap rate's upside down, net income over price. Yeah. That's why if you know stocks, you know commercial real estate. You just don't know it yet until you figure that out. But the PE ratio right now on average, across the board, the net PE ratio is about 20, right? It's a little bit higher, but it wasn't as high as 2008 or 2001, right? But if you look at Schiller's more conservative PE ratio, it's higher than 2008, but lower than 2001. All right, that's just kind of like where we're at today. And then now the PE ratio is one ratio. It's more about earnings, but now what about net sales? The price to sales ratio. We're at all-time highs, higher than 2008, higher than 2001. Just to kind of give you, from a fundamental perspective, are we overvalued? I mean, what do you think, right?
How do they calculate this PE for the S&P? Do they take all 500 and they average of the P's like that?
Yeah, so you know how when we look at one stock like Apple, right? Yeah, Apple has like a 12 PE ratio. But what if we just average, we aggregate everything? This is how economic data works. They aggregate things. Instead of looking at one person's debt profile, one corporation's debt profile, we'll look at the consumer's debt profile, the corporate debt profile, the government debt profile. Yeah. So you believe it or not, when we look at these indices, we're looking at that like a very high level. Yeah. Anyways, so those are the ratios. But the cool part about this, the website that we were just looking at, they give you a wealth of other information, right? Like world population, 7.44 billion, right? And that's pretty in line with CPI, inflation over here. Pretty interesting stuff. You guys want to do a fun one, like treasury rates or anything you want to see?
Yeah, put the 10 and 2 one.
Which one?
Put the 10-year and the 2-year.
10-year together. I don't know if I can do.
10 and 2.
Yeah, you can.
Yeah.
That's fine.
So I'm not a super expert at bonds, but I want to ask you guys a question. Are bonds built to go to the moon? Are interest rates, are yields built to go to zero in this managed economy?
I would think so. Investors.
Why do we keep lowering interest rates?
To provide more lending.
But every time we lower interest rates, bonds go up.
That's true.
So
Because the existing bonds are charging more interest.
so how much further? So if the rate for the 10 years is 2.69, how far is it from zero?
Not a lot.
Not a lot, right? If it goes below zero, it's negative, right? So
Japan's that way, I think.
Huh?
Isn't Japan that way?
yeah,
It used
yeah,
to
for.
be, negative interest rates.
So it's kind of interesting, right? So I don't even know if these, I mean, you learn, you research so much, you learn so much that you don't even know what's,
You get confused.
I wouldn't say confused, it's just like you're kind of like, wow, like, yeah. I studied my way to older age, I feel. Just kidding. But it seems like bonds are just built to keep going up and up and up. And the yield's built to keep going down, down, down. Because who's incentivized to write those contracts? The government, when they need money, right? If we look deeper as to why they do this.
One source said that housing, the interest rate will go another percentage higher. It doesn't seem right, but they said it was set up at 4.5 right now.
Oh, you're talking about mortgages?
Yeah,
Yeah, mortgages.
Go up, going to be 5.5 this year or something like that. So they're expecting the house going to be, pay more.
Yeah.
Because
So when I talk to people, right, in real estate, let me draw a different line. In real estate, it's a different line. There's like a premium line over here, right? So in real estate, the 30 years, like, oh man, I didn't even check for a while. Just say 4 point whatever, right? 4.5%, right? And then you see the difference right here? That's how banks make their money. They need that spread, right? This is the 10 years, so the 30 years. But anyways, yeah. So when you're talking about yield, right? make sure you're distinguishing between treasury yields and mortgage yields.
It is mortgage.
Mortgage,
And
yeah,
that was 1%.
yeah. So if general treasury yields go up, then so will the mortgage yields, right? Is it interesting so far, guys?
We have lots of room to hike the rate.
Yeah, we have lots of room to hike rates, but the way I see it is, it's like working out, right? I always use the example of working out. How long can you go without working out before your body demands it, right? How long can we keep printing money and just push away the pain? The pain is a recession, but we don't want to have a recession, right? But that's just the nature of the system, the monetary architecture, I would call it, right? And the architecture built is just like how we upgrade databases from SQL to NoSQL databases, if you guys know, for some engineers in here. I think the monetary architecture is outdated, it seems. It needs to be updated. We had a comment online. You see, market is now predicting Fed will start lowering rates by 2020. I think so too. I think if we go below 20% on S&P 500, they'll go back to raising rates. And since we're already talking about yield, let's jump to the dynamic yield curve.
You mean they'll go back to lowering rates?
Did I say that?
You said raising rates.
Sorry, yes, lowering. My bad.
They lower the rate.
The markets are speculating that, but I think the actions will diverge for some time before they converge back to what the logic would, what the mechanics would be usually.
This is a classic example of reacting slow.
Reacting slow.
Relatively.
Yeah. So even if they lower interest rates, the effects of it is lagged. And I hear it's lagged like 3 to 5 months. Right? Just because we're down, yeah, they could lower interest rates right now, the markets won't react until 3 to 5 months later. So I was watching the yield curve this week on Thursday. It was a lot more inverted. I actually have a picture of the yield curve.
I don't think they're gonna lower because the payroll is 300,000 people is added.
Mm-hmm.
They're gonna be kind of hold it, right?
Yeah.
They're not gonna lower.
Well, I mean, if you that report that we read, the financial stability report, the one thing they said that they feel asset overvaluation pressures are the number one thing. There's also reports I think there's Wall Street Journal reports commenting on Trump, what he does in the White House every day. He's actively watching financial markets and getting excited about green days. kind of interesting, but I don't know much about that. This was Thursday's yield curve right here, slightly pointing up, but this is the Friday ones. So it's pretty flat. It was a little bit inverted during the week, but still quite flat. So if you guys understand this, when it inverts, typically, recession happens after. Don't know if I want to.
18 months after. So it's
Yeah, so invert right here, and then invert right here, and then recession. Recession's on the right. The curve's on the left. So invert, recession. Invert, recession. See, so now we always look at the left side of this red line, right? Let's look at what happens when the market starts tanking. What do? They lower rates like crazy right here, right? At the very bottom.
right.
But it's kind of too late. So I think the same dynamics will apply. And I think we could probably time a bottom. Because if we time a bottom, man, let's say we really do time a bottom, S&P 500 bottoms out, it starts curving up above the 200-day moving average. Cap rates are at all-time highs instead of lows. Right now, cap rates nationally like 6%. 6% meaning you put down $1 million, you get $60K for commercial real estate. But it goes to 10%. Now I might want to become a developer, right? I'll leverage up all the loans I can because I can't lose that. They're going to print money. Unless they decide not to print money, then I'll probably lose pretty bad. But that would be the ideal environment.
And she said, I agree, like last time I think you said the 50%, that
Yeah.
drop where that,
Yeah.
that might happen.
I was at a baby shower yesterday, and I met a flipper. And this gentleman, I think he didn't do many flips, but we were talking about the market and stuff. Because I was talking to another, 3 gentlemen, and he was like, hey, you a consultant or something? I'm like, no. But we started talking about homes and stuff. And he was telling me that he's losing money on a flip, right? Because the anticipated appreciation is not there, right? If you buy a home, let's say neighborhood is 1.5, and you got the home for, let's see, the home is 1 million, right? The neighborhood is 1.5, right? So you got a margin right here of 1.5. But the issue right now is that the margin is shrinking. It's not appreciating, it's going down. And so the cost that he has to add in between is just not enough. So, yeah. And I think someone told me that, oh yeah, so there's two flippers there. One was actually a civil engineer, or a structural engineer. They said they made 4K on a flip. That's a lot of work for 4K. Yeah, so things are shrinking. I think just wait 3 months. It's very hard to time this. I can't tell you exactly, but there's evidence across different asset classes that indicate that, okay, things are changing. So and the investment, the other meetups I go to, right? This real estate investment meetup. I hear that flippers are becoming lenders now because it's a more conservative model. Instead of flipping, they're just lending money out. Yeah.
So from this.
I think
It's not dangerous.
I think that it's very selective, but
So this chart.
So buyer,
is,
it's
I don't
not
get
reverse.
first.
That means
perception is
down
here.
that means fear is there.
But not.
That means projected higher interest rates. But it's just one more data point, I show you across the board, but it's just one more data point. That's all I could say. But I don't feel, judging from everything, I don't feel too confident about the markets right now. I feel confident about gold. I feel pretty easy sizing up in gold too. So that's okay. Interesting charts that I shared to people online. And I want to kind of talk more about it, right? Because we saw like a huge rally, a 3.7% rally on Friday. Here's a back test done by this gentleman on Twitter, Matt Thompson, CFA. He's a CFA, I'm not a CFA. But he calculated the 4% plus moves in the market, right? From all the way back to 2001. And you see the orange clusters?
Most of them are on the downside.
Most of them are on the downside. So what does this tell us about the tendencies of a bear market? In a bear market, the tendency is that markets tend to rip very high up. So if you see me talking about gold positions, how do I discipline myself to stay in my gold positions? Well, I got to think about this chart right here. Oh, a 4% rally in the markets, I'm in gold. Okay, that's normal, right? So yeah, this is very fascinating. Just a simple mathematical back test about 18 years. You get so much data points, right? So let's see how things turn out. Other people that I follow who listen to earnings calls quite a bit, they're hearing about companies that work with Apple. Apple's cutting back, hiding unit sales. Now companies like, I think Marvell, correct me if I'm wrong, I don't know if anyone works at Marvell or does business with Marvell. They're a semiconductor company off of 237 here in Milpitas, or in the Bay. Oh, you guys work at Marvell? Oh, yeah. So I think they do a lot of business with Apple, maybe. Some of the analysts listening to the earnings calls, the CEOs feeling it too. A lot of them are forecasting a slowdown. So I think this thing is just kind of.
Yeah, unfortunately, they have a way out now. Everybody's just blaming the trade war, because I don't know if you.
But
saw
that's not the
that's not the real
issue.
thing.
Yeah, that's so it's so interesting. The money managers I listen to, they talk about the trade war. Yes, that's like the
Well, they say macroeconomic.
yeah,
conditions
but it's
in
really
US, China,
most of them agree that it's the money printing and the liquidity being pulled out of the system. So I think it's both, right? It could be mostly both,
a little bit of both.
but I think majority of the direction base would be the money supply.
Yeah, but this earnings season, I'm just expecting people blaming the trade war, and they have a way out, so they don't blame their own, Apple's not really selling out things, they're just saying, oh, because of the macroeconomic and geopolitical conditions or whatever. I don't know if you saw Tesla had this thing where they're asking for a waiver for rebate, for a waiver for the brain of the car that gets made for Model 3, which is tariffed by Trump. They're asking Trump to not tariff that, otherwise it will impact their business.
Yeah.
They're just gonna say that during the earnings call again.
Yeah, everyone's saying that. Yeah.
Yeah, we
China this, China that.
yes, because we bought back, but revenue missed.
Yeah.
So
Yeah. So what I noticed is that the markets dipped first, and then the earnings depressing calls came. I learned from this. This is like the first. If this is a great recession, this is my first. So I'm 28. I haven't seen. I probably was somewhat aware of 2008, but I wasn't really in the market, man. 18 in 2008. Come on. What kind of 18-year-old looks at the markets? Anyways, so I feel. I want to observe this as much as possible so that I could potentially capitalize on like maybe the next few super cycles, right? Because if you analyze a person's lifetime, how many, the average age, 70 years or whatever, 70, 80 years, how many super cycles can you go through? Not very many, right? 3. So I think if this is a top of the super cycle, I want to be very aware. I thought about making video notes for myself, just so I could watch it back, like, the next 10-year cycle, I'm thinking, like the next super cycle at the top, I'm thinking, okay, what did my video say in the past? So
You could just record this.
it's being recorded, yeah. But maybe with a face kind of helps. Like, hey man, I know it's been 10 years, but like this is how it went down. These are the markets that went first. So if I share with you some knowledge tidbits that I saw, Russell 2000 went first. Russell 2000 led the way down, and it's still down the lowest right now. Yeah.
In some meeting, you might want to go through reverse ETFs because then it gets a lot easier.
Yeah. So like long volatility or short. Yeah. So but the issue
The ones
with
that go up when the market goes down.
yeah the issue with triple bear leverage ETPs, exchange traded products, the issue with that is that they hold, because it's an inverse, they don't hold assets. They hold
That's
a
true.
mixture of like derivatives that decay. So if you look at the big chart, it's a huge tracking error. It just kind of goes down, right? You look at, I don't know.
It's designed to go down.
It's designed to go down. Yes. Any of them. Yeah. So this is the inverse of the Nasdaq, right? Yeah. It might look good right now. It's purely a trading instrument. But if you look at the long run, look at this tracking error.
Oh, I know.
Yeah. So that's
The other thing that it doesn't show is they actually, I don't know about that one, but on the, I'm trying to remember which one it was, they actually would pay dividends, which would affect what that looked like.
Oh yeah, the companies pay dividends, it comes out of your pocket.
No, I mean, they'd actually pay dividends on the ETF.
On this, on the
If you own the ETF, yeah.
on the university?
Yeah.
Yeah.
And so it would, and then when people look at the yield, they don't figure that in. They say the yield is terrible on them.
Yeah. So if this bear market's coming, I got to ramp up. You got to adjust your living, right? Like you're probably not going to spend more. You'll probably cold call 2 times as hard for business. Have you guys thought about adjusting like your daily
You and I
life?
both, like, we pulled out a 401k.
Yeah, I did. I was down 15% because I was mostly exposed to small caps. Yeah, I was like 15%. I'll take it. I don't care.
But it's kind of like a risky move, I feel like.
Yeah,
In
like
the long run,
long run. Yeah.
Just keep putting in money in 401k, but we did that. I did that because I changed companies, so I could do that.
Yeah.
But I wouldn't do that generally.
Yeah.
It's a risk.
That's the thing I hate about 401ks. Like you're with a company that doesn't offer you like gold exposure. It's like, how do I buy gold? We only got like these small, mid, large, mega cap funds, money market funds. I just switched over to bonds and money markets. So I mean, you can't really lose there. At least, yeah. I'm basically in cash and fixed income. So. And it seems exactly what the markets are doing, right? Because we're saying we're raising interest rates, but the bonds are raising interest rates, bonds should go down, but it's going up because of fear. The fear is taking over what the normal mechanics would say, is what I'm saying. On the topic of gold, for the past month, gold has been performing. We've been talking about gold since November, I forget, but silver has been performing way better than gold, it looks like. Yeah, palladium's been performing. I just don't know anything about palladium to talk about it. I think of gold because sovereigns hold those assets, and I guess I'm a follower of a sovereign. But I'll continue to monitor gold, just because I see that as substantial upside in this market environment. I know it's tough, so I know like a lot of people come in here for stock, so I apologize. Like I don't see many opportunities. Some of the strong ones are still holding up, right? Like Workday.
I think cloud stocks are going up.
Cloud stocks, yeah.
Listen to Stanley dropped a
there's also the discussion of, this one's pretty good. If you look at Workday, still pretty darn strong. This is one of my favorites. They do HCM, Human Capital Management. If you guys are familiar with ERP, ERP is like the whole supply chain logistics software for enterprises. But then over time it branched out into like a CRM, HCM, SIEM. SIEM is Splunk, right? So those are some. It seems like the new modern. So you know old cars, and then there's the new car. The old car would be like a Morgan Stanley. That's an older car, right? The technology stack they're using is kind of old. They're not operating as efficiently. They could save a lot more money if they did. But they're so big that, and they're also in the financial industry, that they're hard to, they have to go through a lot of regulation to become more efficient. But the newer cars are actually like Salesforce. They're rocking like the latest technology stack. They're efficient. They're low employees. Facebook is low employees, like 33,000 employees, compared to like 300,000 employees at GE. 330,000, something like that.
Grow very good. G is up from very good from 6 to 8.
Oh, hey, I mean, if you like it, yeah, I don't see why not. Workday. So, yeah, this is an example of strength in a poor market. So flip it around with a poor market. So here's a poor looking chart, all right, and then here's a strong looking chart. Compare it next to each other. So what happens when the overall market does better? This one should do substantially better. Yeah. Or at least there's a sophisticated group of people with a lot of money who are betting that this is really strong. So that's how I find hints in the markets, right? I don't know everything, but I'm leveraging how people interact with each other.
Workday, CRM, what else? All the cloud stuff, basically.
Yeah, all the application software. So cybersecurity, BlackBerry. Yeah, that's another one I like. But I'm just holding back because I got hit with these large quick drops. All right, now I got wounded, so I'm going to gold. We'll see how it goes because I want to keep teaching and improving my trading, investing, analysis skills, and all that. Are you guys enjoying it so far? Is this a okay session? Okay.
Did you say it's overpriced now with the PE ratio?
Workday? So
No, I mean not that one. I mean just in general market, SPY or whatever. Is that
No, I showed you relatively
Yeah.
between 2001 and 2008.
Right.
So 2001, I mean, price to sales ratio is overvalued, but price to earnings, it doesn't look as bad. Yeah.
Still overpriced. Is it?
Still overpriced, yeah. A lot of people think it's overpriced, but it's not as bad. But price to sales is very bad.
So it's similar to 2001.
So where are they putting the money then? Expenses are too high, if you think about it. Yeah, it's like the Amazon example where Amazon kept going up, but they don't have any earnings, but their balance sheet kept growing. So they're hiding money in the balance sheet, not the income statement. Yeah. So let's get back to where I was discussing. So we talked about the multiple. Did you want to go a little bit deeper into the multiple? It's just a general consensus of like where the market's standing, right? So now this is like the broader market multiple. Keep in mind there's specific sector multiple, right? There's utilities multiple, transportation multiple, technology multiple. Technology tends to be higher.
Can you differentiate between just the conservative one versus the regular one that you're talking about?
Yeah, so the conservative one takes into consideration of business cycles. I could give you the exact definition over here, and then you could search it on your computer as well. If you go to multiple.com, sorry, this is Barrick. This is the investor relations presentation for a gold stock I'm looking at. So you go to multiple, and then you go to PE Schiller. Why do I keep going to this one? Multiple. And I'm spelling it wrong right now. There's no I, you say? I see. Okay, multiple. So the Schiller PE ratio, right here. Actually, I'm sorry, it's not on this website. The exact definition of the difference is over here. PE Schiller. It's just more conservative, right? So I'll give you a quick explanation right here. So Professor Robert Schiller, if you listen to his the Yale lectures on YouTube, right? Education's overpriced, right? Internet education is 10 times up to date, or it's up to date, not 10 times. It's just up to date and cheaper. But parents are still paying for these branded, you know. If you could afford the margins, that's okay. But if you understand where technology is going, like, I like to joke that my degree's in finance, but it's a financial history degree. Anyways, the Schiller PE is more reasonable market valuation indicator than the PE ratio because it eliminates fluctuation of the ratio caused by the variation of profit margins during business cycles. Just a quick sentence. Yeah, that's the difference. So I'll look at both just to kind of get an idea, but it's not something that, you know, it could impact your short-term trading. It's more of a long-term view of where we're standing. Where's the heartbeat of the economy? I like to keep a pulse on the economy just because it's nice to know that cap rates are at all-time lows, right? So you don't go and purchase crazy amounts of commercial real estate because cap rates are at all-time lows. So we looked at the technical analysis, right, the V bottoms, and then we looked at the multiple, the fundamental valuations of the market, the general market. This part I wanted to talk about 3 macroeconomic segments, or macro/economic leverage segments. So the 3 segments is government, corporations, and consumers. Government, corporations, and consumers. All 3 of them are over leveraged, right? And there's proof of it. We already know the government's over leveraged, right? You could look up the U.S. debt clock. We already looked at this in the past, but just to show you the website right here. And I remember when I first started ever looking at finance, I think when I was 18, maybe 19 or 20. This thing was 16, 17 trillion. It's nice to look at this from time to time. The last time we looked at this was probably 6 months ago. So new year, new look, 21 trillion and growing, right? Going back to the discussion right here. So incrementum, there are charts right here. The reason for gold, or bullish case for gold, interest expense. Keep in mind, there's how much debt you have, and as you accumulate more debt, you have more interest expense. Interest expense has grown just as much as total debt.
So that's not good for the business at all.
This is government. This is not business. We haven't looked at business yet. We will look at business, but this is government, right? So government's over leverage. Remember, I said there's 3 parts: government, corporations like Apple, they're entities, and then you yourself, the average Joe. Consumers are over leveraged, but I wouldn't say over leveraged. They're max leverage, meaning, and we're talking about the prime. So within consumers, there's like prime and then subprime, and then poor. So consumers right now, the prime, the best of the consumers, right, the middle class or whatever, they're kind of maxed out according to the collective data. But looking at the government, yeah.
What's that gold line that's going up and down?
This one right here,
Yeah.
interest expense.
Oh, okay, then what are the actual debt is the bars?
Yeah, well, no, the bars are the net debt. So let's say the bars are you owe 1 million, 2 million, 3 million. But the lines are you owe 1%, 2%, 3%, 1%, 2%, 3% of your debt, of your 1 million debt.
Oh.
But debt has grown to, like, let's say 68 to 20 trillion, and your interest has gone up. It's funny because they got 20 trillion, the government has 20 trillion in debt, and they're raising interest on themselves. Wait, hold on. Well, they're not connected. The feds are raising interest rates on them.
Yeah.
That's crazy, huh? Yeah, that's why Trump's tweets are like, you're raising rates too fast. It really, I think these are things that I don't think you should talk about it, but those tweets are very revealing about how the monetary system works.
They can manipulate a lot.
Yeah. There's also cheap ways of getting things to move by just, being a politician or executive and saying, hey, like Elon Musk, right? He has so much power to move Tesla when financially it can't sustain that level. So at some point, that credibility that he's borrowing from people, it'll die. It'll lose out, and then the stock will show it, in my opinion. So I wouldn't go long with Tesla.
So what do they do with the money? So they borrow so much money, what do they do?
Look at the budget, what they use it for. 2% on education,
Okay.
which you guys are paying high, amounts for. But like I think it was like 20% on weapons, guns. So at the end of the day, it's like we finance the guns ourselves. So pretty interesting stuff. So that's the government side. Let's transition over to I could read this out probably. Regardless of increasing debt and interest expense, the government continues to forecast additional budget needs. Now, this is the chart that we talked about before. Not only are they at maximum amount of debt and super high interest, they forecast they need to issue more debt. So the debt is forecasted to go up, right? They're not at a budget surplus, they're at a budget deficit, and the budget deficit is forecasted to get worse. So I'm bringing this up again because, content generation is getting harder and harder after 100, discussions. But this is indicating that there's additional pressures coming from the government section, okay? There's corporate, remember, government, corporate, and consumer. So right now, government is forecasting more instability or more pressure at the government level. Corporate level, share buybacks and over leverage, that's another stress level. And the consumer is the best of our borrowers. The consumers are kind of at the max. So this is where we see over leverage. Versus India, who has a younger demographics and they haven't borrowed yet. So that's prime to find some great Indian stocks or whatever, if you want. So that's the government picture. The corporate debt. Total private credit has advanced roughly in line with economic activity. So not as bad as the other years, but this is the corporation debt right here. Right, 2009 is a lot higher. And then consumer debt. So this is the prime, near prime, and subprime. So subprime has a lot of space, but I don't think we want to lend to them. Well, that we will, it's just a lot harder, right? Because of increased regulation after 2008. Near prime is kind of right here, right? So these two, subprime and near prime, they haven't reached, did subprime reach? Yeah, they haven't reached like 2008 levels, but they're at 2000 levels. Huh?
Subprime can never go up that level anymore, right? Because of regulations.
Yeah.
Just prevent that.
Yeah. So.
It'd be helpful if that were per capita.
Yeah.
Rather than total.
Yeah. That's the way. I think we could get that data. Someone could always calculate. It's just number crunching. But this is the prime, the picture of the prime. So now you have an understanding of the economy from the government, the corporate level, and the consumer level. Right? Super duper interesting. Bear market tendencies. Okay, we already talked about that. Yield curve, we talked about that. So let's talk about the dollar index real quick. I noticed that the dollar kind of gapped down. Just like 2 weeks of trading. So the dollar looks like it's topping. What does that mean? If the dollar goes down, interest rates are going down. So the dollar index is speculating interest rates will go down. Because when interest rates go up, then the dollar goes up. The dollar looks more attractive. But now we're seeing the dollar goes down, maybe because interest rates are speculated to go down, or there's less fear. There's a little bit more confidence in the market, right? Gold also went down for 1 day, just a little bit though. So that's another. You see how you see.
Near-term dollar might go down, and emerging markets and the U.S. stocks will go up.
Yeah.
Like that's just near-term, like let's say a month or two.
Yeah.
But that would happen, so your gold will go down. I mean, from a higher low.
Yeah. So that's what it looks like on the weekly chart. And I think the main thing to keep on monitoring is, yes, of course, markets, but also the dollar index or currencies, right? If you look at FX currencies, it kind of reveals everything because if the dollar goes up, every other currency goes down. Pretty cool.
Doors are locked, yes.
Oh man. Okay. So sorry about that. Can someone open the door? Wow. I think it's the wind. It's pretty windy today. Okay. So the last segment, we have about 30 minutes left. I'm gonna go over the gold, some of the gold stocks I'm looking at, and maybe I'll share some updates. What I've been doing for the past 2 weeks. Past 2 weeks, I haven't been actively looking at markets as much. I've been making a commercial. I'll give you a little teaser of the commercial. We'll wait for Kai to come back. But question to you guys: what do you guys think of gold after today, or I mean, like, how do you feel about what you just learned in the past hour and a half?
Sounds like it would be a good short-term investment.
Sounds like a short-term investment.
Good short, yeah.
Yeah, or like the general environment, like, how are you investing currently, and how's it affecting you? I just want to hear some feedback from, a small sample from the market.
Thought if the market's going up short-term, gold would go down temporarily.
Yeah,
So then after that, gold would be a good investment.
yeah,
After it turns back down.
yeah. But do you guys understand, like, gold is just a currency alternative to a sovereign who's losing control? But they could always repeg to the dollar, gold to the dollar, right? But then then gold would go crazy, crazy up in value. It's just those are the limits of investing. I notice not much left.
What do you specifically think about the earnings season that's going to come up? Like Netflix is.
Yeah, I think
next
this
week.
a lot of the it's like Apple, right? Out of like 15 years,
Yeah,
first time they do a pre-announcement.
And that
It's a little bit different, right? So they're already announcing right now, as you notice. Yeah. Hey, guys, sorry about the door. I think the wind. Yeah. I'd love to give you a key if I could. So this is the last segment. 30 minutes left. We're just going to talk about gold stocks. But since you guys are back, I'm going to show you a quick commercial. So I learned something new. If you guys ever want to learn marketing or flying a drone, I could share some advice. So the commercial is kind of cool. I only showed it to one person. I showed it to Sachin. I think he's online right now. But basically what we did was we literally went to San Francisco at 4 a.m. in the morning. And we caught the bridge at sunrise. I keep saying sunrise. And then we went to a cafe and shoot some pictures after that. And the one I'm going to show you right now is a teaser of the first scene. The last scene is actually at the Apple headquarters. So it's a video of flying over the Apple headquarters. I don't know if that's legal, but yeah, it was actually pretty exciting. Things that make life kind of fun. But that's what the Apple spaceship looks like. I didn't know there's a lake inside. Yeah, yeah. It's like Apple's Ark or something. Just kidding. But yeah, so real quick, just 40 seconds. So these are all live shots that we did, nothing taken from the internet anywhere. The music sounds kind of bad because it's a recording of a recording. It features what I do on a day-to-day. And then you gotta have the stock charts, right? And then the phone calls for the deals. So that's scene one. What do you guys think? Any feedback?
That's your promo?
Kind of cheesy. Yeah, that's my promo. Yeah.
That's a drone, right?
That's a drone shot. Yeah. So we flew the drone over. So one thing I learned about this experience working with people who fly drones. There's venture capital being invested into like DJI and all that. Like Sequoia invested into DJI. What I learned is that the consumer today, the modern day consumer, average consumer, which is like, let's say average 25-year-old kid, whatever, they're equipped with so much technological, like before you had to be in a helicopter to film the Golden Gate Bridge. Today we could do it with like a drone this big, a little bit bigger. So, not trying to promote a drone, but yeah, just kind of like analyze like what's going around in the world, right? Pretty interesting stuff. Anyways, so last part, gold stocks. The last month, December, 1 month of gold performance. What do you guys think? Not bad, right? If you guys did a quick trade, it's gold and silver perform. I wasn't looking at silver. I was just looking at gold. 2019. I think if the markets keep tanking or pulling down, then I think gold will have further upside. Some of the top gold analysts out there. They forecast gold right now, 1,286. They forecasted 3,000, and then some very optimistic ones, 3,500. That's a lot, right? If you look at a gold chart, people say that gold is still in an uptrend. It's just taking a break, a 6-year break. Oop. So this is gold right here. Go to the bigger picture, right here. So we always look at this chart. I can't change how different it's going to look because this is a monthly chart. It moves extremely slow. But the key things to look at it when you're looking at the gold chart, at this point I feel like I'm pitching people to buy gold. I'm not pitching, I'm just sharing you my fascination of how I got sold on gold through a logical analysis, right? 2001, a recession. Gold tends to outperform in a bear market. 2000, should I do this one? 2008 to 2009.
Hedgers must have gotten killed.
Huh?
The hedgers must have gotten killed on this.
Yeah, of course, yeah. I mean, someone has to lose money for you to make money too, right? And so...
Option sellers went bankrupt. Optionsellers.com, they went bankrupt.
What did you say?
Option sellers, that does commodity, they lost all the money.
Yeah, so Sylvia asked if they predict gold to go up to 3,500, does that mean that they believe this recession will be worse than the last recession? My take is, I think they're going to print money like crazy. Central banks.
Predict gold up to 3,500?
No, they is the gold analysts. So a mix of money managers.
Right? It's like 1,300 right now?
Yeah, 1286.
Does look like a falling wedge, which is like a general bull flag.
A falling wedge. So you're talking about that one?
And then goes back up.
So a little bit right here. What I'm looking at is rounding bottom and support at 1,200. So 1,200 might be my risk. I'm aligning myself to, why am I on the gold bull side? I'm aligning with like Jim Rogers, right? He met Jim Rogers. He got his car, that's crazy. And then sovereigns who are buying gold, right? In the past year, we saw how I showed you earlier, China's printing money, but behind the scenes they're buying gold. Russia is also buying gold. So I'm aligning myself to that trade. Could they be the ones holding up this support zone? Maybe, if they're acquiring like 1.8 tons each, right? Make it 3.6. So we'll see. It's not going to be an easy trade. Nothing goes up if you play the markets long enough. But I think this is a strong opportunity. I know Naveed in the back, he's probably like thinking like, oh, this guy's sounding like the CNBC guys who talk about gold all the time. But
Absolutely, gold and silver. If anyone hasn't bought it, I would say buy it.
you think so?
So Palladium also had a sustained growth there.
Yeah, Palladium's gone even higher. I don't quite understand this one yet. I never done research.
You track the ticker for Palladium?
This is the Palladium futures contract right here. It broke out and gone even higher. So
Do you use a whole lot in industry, because there may be more demand because of that?
yeah, this one I'm not too familiar with, but it's performing even better than gold, right? But I'm only aligning myself to gold because of the sovereign distress and the monetary architecture cracking, is what I'm saying. That's the only reason why I'm in this trade. If not, I would be in software all day long. But right now, I know you said cloud is good. They're saying, overcapacity in semiconductors and overcapacity in cloud development. Meaning like too many players jumped on that. I probably just didn't see it because I wasn't aware of that overcapacity.
Semis is cyclical.
Cyclical, yeah.
But
Now,
cloud is like there's a lot of
Now, sorry to interrupt, but Micron, I'm not pitching this one. This one is about a 1 book value, but this could go lower. It's ridiculous.
yeah, I don't understand how it could go lower.
I know, it's
crazy.
cra-
Right? This is the first time I'm seeing
Yeah,
this.
I think stocks could go lower than book value. The reason why we don't understand is because we don't own controlling amounts of shares, right? Because if you own a controlling amount, then you could decide what happens next. Do we liquidate, go out of business, or do we just hold it at below book value and wait for the market to recognize it, right? You have to put yourself on the seat of the board. And I think it's weird, man. There's a lot of stocks that are like the gold positions that I'm in, which we're going to talk about next, and how I came to the conclusion of those gold securities. It was a mixture of Real Vision, FinViz, and looking at some fundamentals. But let's look at those gold stocks now. So let's do one. So GG is one of the positions I'm in. This one I have about 55 contracts on. I plan to load up more if it's a 2-year contract, or is it 3 years? 2021. They're not that expensive. It's just $200 each.
So you bought the ATM?
At them, no, I have $8 calls. So I've been accumulating. So I have $8 calls, and then I think I have 10s.
So which is closer.
They're both like 3 years out or whatever, 2 years out. Now, I'm going to show you how I found this through scanning, right? Because what I want to pick when I look at the gold industry, so if you know FinViz, you could filter out to like everything gold. So what I did is, you see right here, industry is gold. There's only gold stocks in here, right? Gold miners. And I filtered it from biggest to smallest, right? And then I jumped over the valuation, right? So immediately I know this one, Newmont, is like the 18 billion big, gold miner out there. But I want to look at the segment real quick, and I noticed that the price to book value for GG is 0.61. For KGC, you know who's in KGC? Quantitative hedge fund guy. Damn, I forget the names. Richard Simmons, or is it Jim Simmons? Yeah, sorry about that. Jim Simmons, one of his biggest position is in KGC, and I can see why. But going back to it, so GG below 0.61 book value, meaning they're worth lesser than their current stock price is below all their net assets. So they sold everything today. There's 0.4 amount of book value in there.
So I don't even see GLD on this list.
Yeah.
Why is GLD not on or is
GLD is the ETF for gold specifically.
Yeah.
This is gold miners.
Oh, gold
Yeah,
mine.
I mean, I'm actually curious, why are you targeting companies? Just go for the ETF, right?
Diluted exposure. I want pure absolute exposure, so more absolute return than diluted returns. But you take on higher risk.
Yeah, exactly. And a lot more analysis than
Yeah,
you gotta
yeah.
make sure that these
Yeah.
companies are not like, because their earnings will come up and then you don't know what's gonna happen.
Yeah, yeah.
And if you wanna play extra crazy, you could just go buy JNUM.
Hey man, I'm a millennial who can't afford a home or don't want to afford a home. So it's like, what are you gonna do with your money, right? Yeah, so I'm just taking risks just because I got the time premium.
JNUM and 3x
Yeah, yeah.
leverage.
So KGC, Jim Simmons, this gentleman right here. So this guy, he's managing one of the biggest portfolios out there, 97.27 billion, right? And one of his biggest position in terms of shares, because I like to analyze shares, not just total value. You can look at both. There's nothing wrong with that. I know we have some conflicting opinions in here, like, oh, should you look at shares or should you look at total value? But his highest share position, or one of his highest, right here, shares, this guy has his highest share position, 55 million shares in KGC, Kinross Gold Corp.
Where
Right?
did he accumulate that?
This one, so this is updated as of most recent November. So we have about, remember, that's the soonest I could get the data. I can't get it any sooner. Unless you know him personally and you can hit him up and give him a call. You can probably cold call him, just start talking about gold and he gets really passionate and then you never know, he'll leak some information. But then that would be against the fiduciary duty of his investors.
Get him bragging.
Yeah, get them bragging, exactly. If you're an expert on the phones and you know how to do professional cold calling, you start talking first, say something that gets them to bite, they'll talk for hours. Anyways, KGC, his biggest shares position, but his biggest value position is probably a high dividend stock. Microsoft's his biggest one. So I really like Microsoft as well. That's just a safe place to park money. I just don't see large caps shrinking that much. So that's why some of the people that I follow, the money managers, calling puts on Microsoft and Salesforce. I don't know. Like I respect your insights, but I think this is where we diverge. Where I'm gonna come up with my own analysis. But I mean, if everything goes down, then they're right on that trade. I feel. But anyways, as a trader, and I know this guy's probably he has the trader instincts. His highest shares position, meaning if this goes up $1, he makes 55 million. Goes up $2, he makes 100 million.
What's the price right now?
KGC, so KGC is also below book value. KGC is right here. So book value is 0.89.
No, I mean the share value.
Share price is $3.24. Yeah, I was looking at this, I noticed it accumulate around 2 over here, 280. And then when I saw this rally $1, I'm like, dang, or rally that much, I was like, this guy made a lot of money. It's just nice to kind of track a portfolio of a money manager and see what they're buying. But that's KGC right there, below book value. So going back to this, I labeled the biggest down, looking at book value, GG is 0.61. KGC is, I didn't really look into this one, it's 0.89. But the other one I'm really looking at is AGI, 0.55. Right? And gold's the new one. Gold's the new one I'm looking at, GOLD. This one looks very attractive. So let's jump into the stocks that I'm looking at over here. This is the quick segment look of it. But GG. So what do I see with GG? Gold core. Ascending triangle. Yes, prior to this long downtrend, which suggests lower prices to come. However, I think the fundamental / book value of the 0.61 suggests a bottom is setting in. Especially if you notice that the many day of sideways price action / accumulation that happened right here. So I personally think this is probably a false pattern. Typically this is a pole and then a pennant, right? So that's bearish. But because it's hanging out at 0.61 book value, I think it has limited downside and the potential upside with the sovereign stress and the monetary architecture decaying. I think this one, you know, up to you, educational purposes only, okay? Yeah.
Several of those had real good price to sales ratios too.
Yeah, yeah. You can look at that as well. That's more the income side. I was looking at the balance sheet side, right? This one is kind of like, I'm thinking, how can you lose? Unless the sales gets really bad, unless they start losing a lot of money. But they had 6 years to 6 years. So gold rallied till 2012 or 2013, and then 6 years to, you know, all the miners will adapt. So I think they're a lot more efficient to capture money now. So that's GG right there. I'm just gonna keep watching this. I love the tightness, constant action that I'm seeing right here. It's just telling me that no one's letting this go down. What happened over here? I think this was towards the end of the year. This is the end of the year line right here for GG. So tax loss selling, right? You're down a lot. You wanna take it for this year, so that you know your taxes are better. So that's what I'm seeing. So it's a new year. I am watching this through my phone quite actively. I plan to plow into the trade if it starts going in my direction. But for now, it's my personal comfort zone, right? I'd love to do 1,000 contracts, but I'm not there yet. But I hope to be there. Maybe even 55 million shares, just kidding. That's GG right there. AGI, another one that looks interesting as well. The new year, seeing some pop right here a little bit. But I love the fact that it's closed above this line right here of prior resistance, right? Especially on some volume right over here. So not looking too bad. Looking at the volume over here, slightly lower, but nice amount of volume just going sideways for GG. You guys want to look at the fundamentals real quick for GG? Or is this a good analysis so far? Here, another look at GG, a bigger view of it. Don't do this. Don't see how high it could go, though it does look kind of attractive, right? It was previously in 2001 when gold was at its high of 55, right? So if this is a true macro event and we get this huge pop, this is a huge trade. Can this go to 100? I don't want to dream about that. I want to focus on managing the risk of my position, though it's nice to think about it from time to time. So there's substantial, you know, upside if this is true, right? So you got a $10 stock going to 50. Don't practice that too much. From time to time, maybe it's healthy. It does pay a little bit of dividend, not bad.
Dream big.
Yeah, dream big, right? I honestly wish I could. You know, I don't think you ever get comfortable plowing into a position, like going with size, and just. But the way I perceive the economy now, with all the printing, a lot of millennials don't even have a chance if you think about it hard enough. Like, how are you gonna pay Santa Clara, lowest one, $1.2 million home, 30 years. I mean, you gotta do something. It's asset prices are stretched. It's obviously stretched. It's hard. It puts pressures on everyone's fundamental lifestyle, right? You need that roof over your head, security, food, and all that. So it's difficult. But this is, going back to it, this is GG. Let's look at AGI. and we'll close it out. I don't want to bore you guys with gold all the time. AGI is similar to the scenario to GG, also below book value. Demonstrate how I found these gold miners, make sure of this. Oh, and also the charts. So how do I find these securities? Real Vision, FinViz, right? Filtering through FinViz, and then the charts. The charts look good. One of them is KL. KL will probably be the next one we'll look at. So this is AGI right here. I like this because it's below book value. This one doesn't have the options I want, so I bought shares on it, right? And it's relatively low as well. That one was AGI. So AGI, looking at the monthly, so back test, so at one point it was pretty high at $9, but $3. So these are relatively cheap.
So in fundamentals, you're only looking at the book value, or do you look at the other data, what they do?
Normally when it comes to software stocks, I look at all of it.
Yeah.
I look at the expanding margins, the historical margins. We could do that real quick right here if we go for a deep third. I just don't want to drag it too long where you guys are getting sleepy, because I know after like 2 hours people like let's see, let's do GG, and then we'll look at historical margins, right? Because right now it's damaged, it's beaten down, but let's look at what the margins are on GG. Gross margins 10%, very low, right? But I learned from experience in watching the markets is you want to buy stocks when margins are extremely, or when margins are negative, because they become positive. But when it's positive, then everyone knows about it already. So that's where you have to perform critical judgment and buy before the crowd, and that's what I'm perceiving right here. So if we go deep into the 30-year financials of just one gold company, and we look at the gross margins, going down to, let's see, operating margin, gross margin, right? So how did it perform historically when gold in 2012 was at its peak? What were the margins of that company? Now, after 6 years, they had 6 years to, get fit financially. What happens when gold starts expanding? That's my investment thesis in my head. So we'll look at the 30-year. So probably not the full 30-year, but at 2012, they had margins about 50%, right? And 2008, at one point, they had 65% gross margin. So they could get there, right? And margins fluctuate with sales, right? So as the gold price goes up, then sales go up, their margins increase, right? So, and I'm looking at the top players. These are top 5, right, by market cap. You go to gold. So I hope to share these ideas. This is how I go through my investment analysis. I hope you guys like it. So looking at market cap over here. So these are the biggest players, right? I'm looking at the top 5 to 10. Oh, sorry, I don't want to highlight. Oh, no. Top 10. So these are the top 10 right here. So I know that who else are trading in the markets? It's not just average Joe. Institutions are playing the game too, right? And I don't doubt that, hedge funds probably come first in terms of accumulating a position, and then I think mainstream mutual fund managers accumulate next, right? And then average Joe at the end. That's probably how the accumulation works. In terms of exiting, is about the same. Hedge funds first, mainstream mutual funds, and then average investors. So I think that's I think the mainstream mutual funds haven't agreed yet, but I think the hedge fund managers who are more savvy, sophisticated, and always in the market, I think they've come to a conclusion that gold is the play. So these are the top 10 players that I just feel like, well, this is what the industry looks like. How could I go wrong? But you can't let your guard down. You got to have always risk manage. So that's why it's education only.
And the GDX is the ETF that does
GDX is the gold miner ETF. If you want to be lazy and not do like fundamental analysis or any other type of analysis. But yeah, hey, thanks so much, man. See you soon. So yeah, I like NEM. ABX acquired GOLD. Right. So I like GOLD as well, but it's lower on the list because it got acquired. I like AEM, number 4. I like number 5. I like number 7 a lot. But number 7 is very difficult to buy because you'll see the chart. We'll look at the chart next. KL. So this is KL. Very hard to buy, right? So I bought some, but these are smaller option sizes, option contracts. But this one seems to be a strong performer. If you pull up the monthly, it's done nothing but perform since 2016 when gold's in a I guess you could say a correction or sideways bear market. So this one, I haven't done deep research, but I'm hearing that from the gold analysts that they own strong ore bodies, gold ore bodies. That's the thing about this industry. Whichever has the cleanest ore bodies. I can't wait until we go back to software and talk about technology. Like now I'm reading about gold, and they're talking about like mine collapsing and like these Caterpillar trucks and all that.
Well, the load quits you dead.
But you learn a lot about the world, and I think that's what this game taught me. That's the cool part. Won't the miners have lower margins as compared to ETFs? ETFs don't even have margins. ETFs is just a collection of all the miners. If that's what you're asking, SK from online. Okay, so a few more stocks and we'll close it out. Okay, guys. So sorry to.
Any ETF in this sector?
GDX is the gold miner. Yeah. That's AGI. This is AEM. This may be institutional favorite, it looks like. I mean, the top 5 will be an institutional favorite if the investment thesis plays out. KL, this is what KL looks like. Broke out to new highs. This is looking good. It's looking strong. And it's a new year too. So if we could get a retrace back to this line, hey, maybe I'll consider some more. But I don't have too much of a large position on this because I like to buy it more on a retrace to like a 50 MA or a 20 MA. It's a little too far for me, especially this parabolic move right here. PVG. This one's looking good. Nice breakout right here. Most recent breakout. Nice start to a year. If it does retrace, expect maybe back to 8.5 over here, and look for a potential position. And then this is the new one, gold, new stock that came up on my radar this week. The stock gapped down due to some M&A news. So wouldn't it be better to buy ETFs as compared to gold miners since they don't have mining? No, they do have mining costs, but ETFs are diluted returns because you're sharing the returns with like a collection of the industry. You're not getting absolute. It's all preference. There's no. I mean, if you look at the process of analysis, the investment process or thesis is different from what you're asking. What you're asking is more nitpicking. Like, should I go ETF or should I go absolute return? So it's all preference. And yeah, I think that is it. That's all I got for you guys today. 2 hours of fun and talk about gold. You guys have any questions or Happy New Year?
So there was a theory that S&P 4-year average is sort of the key support level during a bear market, and there was some backtesting done that if you go back and look at the S&P 4-year moving average, when it was able to hold the support level, it resulted in recoveries.
Yeah.
When it broke through,
yeah,
it led to a deep bear market. So
yeah.
Can you comment on, or do you look at 4-year average?
4-year weekly, you mean?
So I don't have 4 years. I have 360. I have a 1 year. Wait.
No, you can add it.
Custom. I mean, I don't normally look at this, so.
We don't need to look at it now. Maybe next week or something.
4 year, and then.
Just change the date to. Oh, is it 4-year daily? You were saying, or weekly chart?
I would do weekly, I guess.
Yeah, but it should be weekly. But select the weeks. Is there the week in there?
Yeah.
And then put the 4 year. Yeah.
So 4 years back. So each one of these is a weekly,
Right.
but you're talking about a 4-year moving average.
Yeah. So this may be
That's
something for a
that's
future class.
that's super slow. This is a JC question, but he's not in here today. He's usually in the corner.
So I'll send you an.
50 week.
He looks at the weekly and he looks at
50 week.
a larger time
So I'll
frame.
send you an article offline.
Yeah.
And maybe this is a topic for a future class.
Yeah, hey, we could do that. As long as you guys don't get bored of talking about the S&P 500 over and over and over.
Go bankrupt before the thing line moves.
Yeah, that's the other thing. But guys, 2 hours in. Thanks so much for coming to my number 100. holy crap, right? We'll keep going.
Do you have any attendees who are there at the number 1?
Number 1?
Yeah.
What do you mean by number
Out
1?
of the virtual classroom.
Oh, how
Is there
many?
anybody that was there? And
He started
That's-
with
Oh,
you,
at
started
number
with
1,
you,
dude.
Winston.
You know,
You don't remember?
myself, there's like 18 people online right now.
Who's your oldest student?
Liz is online. Yeah, Liz is probably like my you met her.
Yeah.
Yeah. Hey, thanks, Raj. Hey, he used to be here. He used to work at NVIDIA, but now he's at, I think, Samsung in Texas. Yeah. So, the crazy part is that this thing started with 3 guys at Starbucks.
Oh,
Wow.
Oh,
Yeah.
nice.
Yeah.
I
Yeah.
have a
So who
question
are the,
about-
other 2 guys?
One of the guys is a friend. He's in LA. He wants to attend, but
Okay.
hey, thanks, guys online. Well, he can still attend now. He's just he's my age, so the people my age are still digesting consumer lifestyle before they cut back and become producer lifestyle. First time attending. Thank you so much. Hey, you're welcome, May. You have a question too?
How do we leverage the information that we like about gold in our 401ks?
Yeah, so 401ks, I don't think employers, they don't normally go and, work with a financial advisor and say, hey, I think you might know this though, but they don't go and say, hey, give us gold exposure. It's mostly like equity exposure, equity in bonds and cash. To get that exposure, you would have to now I'm not a practicing financial advisor anymore. I have licenses, but I don't do that anymore. But you would roll it over to an IRA and get exposure to gold. But then there's tax implications and all that. So.
Hey, what's the name of your Telegram?
You could just send me a text. Whoever wants to join, you can shoot me a text. It's phone number is 66. I'll write it down. But thanks so much for keeping up and coming, guys. I think Santo, you're one of my oldest too. Yeah. So the days when we were in the Milpitas library, and there are some. I have a picture actually. 692219888. It's funny because the way I view it is just, I don't know, man. This is something fun to do. It's nothing. I'm curious to know what other people do as they progress in life and gain wisdom. And, yeah, I don't know what other people do, but it's nice to see, I guess.
That's 3 weeks old in stocks, so.
Oh, you just started like 3 weeks in? Yeah, I mean, yeah, it's just like it's a long ride, man. Yeah. Okay. All right. Did you guys have any other questions before I close it out? Let's see. So wouldn't be buy ETF. No. Happy New Year. Happy New Year to you guys, and thanks so much. Raj Pishang, are you going to extend today? No, for the most part, I think I'm done. I think people here in the room is quite tired, so I don't want to force anyone to wait. But if you guys have questions, we could bounce ideas and feedbacks on how you feel about the markets. I'll stick around.
Share this doc.
Share the stocks?
This doc.
Yeah, I can share the doc. I'll share it through the chat. It's just a lot simpler because there's a lot of people now, and it's my time to distribute. So I'll just send you a link. Just shoot me a text and I'll send you a link to the like your name, and then I'll put you into the chat. First time attending. So the commercial, that commercial is gonna be for the real estate stuff, but like we were like, okay guys, let's make a real estate video, and it somehow became an investment video. But we're gonna do it for real estate, and yeah, I hope to meet more people in real estate too, and just if I could find deals that I don't want to service, I'll hand it out to whoever's like close in proximity.
So you do the real estate meetup too?
That's something that's planned with the real estate investments. Yeah. Hey, thanks so much, man. Hey, thanks, Shati. I was like thinking of like the name for a second. Sorry. Hey, Santo, thanks, man. For the real estate one, I think it's essential to have deal flow in that. That one, I mean, your question is like what I
do sometimes with real
Thanks so much,
estate
Bob.
because I was looking into flipping things
Yeah.
as well. A little
Yeah,
bit
the
of-
beauty-
I haven't started, but I just kind of exploring it to do that as a part-time thing.
what I learned about the real estate is you get access to leverage, and because you get access to leverage, you don't get the same access you do in the stock market besides options. So real estate, the banks by nature love to lend mortgages and construction loans or whatever. So by that nature, like it's 5% cap rate on commercial real estate, but you're not putting down that 1 million. Right, you're putting in only a portion, so you get exposure to leverage, and you can really pull that value out. So I feel like this is how if they gave the same leverage to stocks, which they did before, like 6-to-1 leverage or whatever, you could build wealth pretty nicely. But after
The
regulation,
portfolio margin, they do if you can open the account as a portfolio margin account.
oh, like a prime broker,
So
or
they have the Ameritrade, you can open
Yeah.
it, and that has a big leverage.
Yeah,
I
yeah.
don't like to do leverage
Yeah,
too much,
I agree.
but she can, I mean, if she knows it, then it can work either way, right? So-
yeah. So in my understanding of like investing now, real assets, you know, when things don't turn out right, the system doesn't work,
Yeah.
real assets is where it's at. So I'm kind of glad I jumped into real estate. I didn't have any intention of doing it. It was actually like, we just, the club kept growing, and I'm like, okay, well, eventually it's gonna get to a size where we don't have a size, or we can't fit everyone in the room, and so we end up here. So we'll see where it goes, yeah. But there's some cool stuff. I'm working with Dr. Yang, who is part of the technology VC ecosystem guy. He knows a lot of Chinese PCs and stuff. So it'd be cool if we could like find deals in that segment, and just like be like a network to like share across, you know, whatever you guys want to do. Because okay, so there's cash flow. How do you get cash flow? Cash flow comes from deal flow. Deal flow comes from people.
Yeah.
So you need a network,
Yeah.
right? So there's beauty in having a network. And if you look at Microsoft, they're extremely intelligent in acquiring. Why do they acquire GitHub? Because it's a network.
Yeah, it's all network.
Yeah. It's all network. So there's digital networks and physical networks.
Did they buy LinkedIn?
Yeah, they bought LinkedIn as well. Yeah, that's one of the biggest. They bought a network, man. They like these days with technology, with information, like education, right? It's super high up there, but the value's so low. It needs to meet. There's room in between to make money. Meaning, if it's priced up here, you could price it below here and sell leading knowledge, and you get the in between. So the concept that I learned is that anyone who's getting too much margin, like BlackBerry getting 74% margin, well, competitors are going to jump in there and compete for those margins. So the only real way to make money, it has to come from like someone else, right? And so you have to just compete for margin, but margin will shrink as more people learn about it. So yes, the sooner, if you know it first, okay, this is an example I use. If you see stuff on the internet or whatever, like how to get more followers on Instagram, on YouTube, why are they selling education? You know, if you think about it, it probably because that technique doesn't work anymore. But they're still, that industry is kind of maturing, it's getting saturated. Now they're getting money from that segment instead of like how it used to work. So this is, I know I sounded a little complex or vague, but it's the study of platforms. This meetup is a platform, and you see the platform more if you put yourself in my shoes and look at the audience, because I'm a platform, you know, and I have to think about how this platform evolves or whatever, because there's transactions that are going between the platform as it gets bigger and bigger.
Real estate and stock meetups, or?
No, I mean just in general. It's just me being philosophical.
Oh, okay.
Yeah. But yeah.
I mean, my question is still about the real estate. So, did you decide to get into real estate because anticipations of a big sell-off, or because you needed the space and you thought like real estate is probably something?
I would say 75% the space, because I was like looking on Yelp, like where are nice places to host, and then I saw this picture of this room on Yelp.
And then you had a real estate license,
And
and
then-
then you asked them if you could work here, or?
Yeah, so you get your license, and then you could ask any broker, because every broker wants a performer, right? So if you want tips on that, I could share with you as well.
Yeah.
Yeah. So get your license, and then you could jump with any broker you want. They will even find you by sending you mail.
And then you get paid by Keller Williams or no?
No, you get paid by the deals that you go out and
Oh,
hunt.
like
So
commission?
yeah,
Oh, okay,
Yeah.
okay. But you have access to this office.
yeah, that's the beauty of it. So I pay about $150 a month for this office, but like, dude, I get a party. I get the party in the office. I get to host meetups.
Yeah.
In
Probably
Coop-
the only one
in
that
Coop-
uses the most.
Yeah, I know, right?
Without
In
any, like-
Cupertino, in Cupertino. so yeah. I mean, I'm just trying to.
That's pretty interesting.
I'm just trying to have a good time, and like, when people come in here early, I say, hey, you guys want a tour? Like, I'll show you how it works.
Oh yeah, I'll come in early next week.
Yeah. Yeah, it's basically, I mean, the structure of a financial advisor practice firm is the same thing as this. It's the same. Each advisor, each real estate agent owns their book of business. But it's the same for investment banking, same for software sales. Every account executive at software sales, they own their book of business.
And they just, the goal is just to grow the book value.
Yeah,
Just-
every business is to grow the book, yep,
Yeah,
100%. and it's all performance based. And so, you know, people who don't want to do sales, they become investors because it's like, I want to invest in the salespeople, right? You look at the sales, like when we look at stocks, we're looking at the ones that with the, you know, growing sales and margin and all that. Yeah, so everything is interconnected, super duper interesting. Where do I see it going? I don't know. I'm just gonna keep growing it from 3 guys at Starbucks to.
How did those 3 guys meet? Or you 3 guys? How did you guys meet?
It was just a meetup. It was my first meetup.
Oh, you just posted a meetup.
Yeah.
Hit anyone to talk
Yeah.
about investments.
Yeah. So I could write a book on what I learned after 100, you know, meetup sessions. Yeah. But basically, what I learned is that I'll show you some cool stuff. There's power in the platform. I learned that, you know, I've met so many people at this point that honestly no one knows like anything and everything. Everyone, no matter your age, is still pretty directionless. That's something you just gotta find in yourself to find direction. That's what I learned. Plenty of like older profiles come in here, and I get some insights about like, you know, like me chatting with Sylvia. I think she's online. And one time we joked like, you know, I asked her like, I said something, and she's like, you know what, Kay? I ask myself that question every day. I said, you know, like at some point you're gonna be happy with this amount of money. And she was like, yeah, like I ask myself that question every day. Yeah, so I don't know. What else did I learn? There's a lot. I have a lot of lessons that I learned from this.
I'm sure, right?
Being like, you know, like focused, having a purpose each week. It's really nice to have. We could go on for, you know, for days offline.
Are you guys active on Telegram or?
I mean, somewhat.
Every day or?
Not every day, because it's growing kind of big, and I think other people are kind of shying away from making a lot of comments, just because the capacity. So I thought about getting on Slack and then sectioning out by like, you know, macro talk, index talk. The only issue with that is it doesn't save unless I subscribe, and I have to pay each user.
10K message limit or something.
Yeah.
I used to have that, but then with like crypto and all of those.
Yeah, so I was thinking I could segment that out, and then like, you know, if anyone wants to be like a moderator, and we just keep controlling the stuff and like keep learning. Because I learned that networks teach you stuff. There's knowledge in networks. You just gotta learn how to tap into it.
Big numbers of people.
Networks of anything. Networks of people. Like there's patterns everywhere. The same patterns in life repeat in technology, in software, in relationships. You know, fractal patterns, patterns within patterns within patterns. Dude, that's crazy. Like,
You lost me. Okay.
sorry. So let's say for example, you could call into a network that you like. If you could visualize like how the brain works. There's like networks, right? Like different nodes or databases. You could call into different networks and learn something new, but you just have to figure out the ecosystem. So if you know how like that's like a factual or nature of life, you just call into that network and figure out like some good information, right?
Yeah.
Or like 1 + 1 = 3. If you saw in about the meetup, like, you know, like you coming in here and we bounce ideas and somehow we learn something new.
Right.
So that really helped me too. Or seeing how someone else analyzed, like JC, he taught me how to look more at weekly charts when I was just looking at daily charts. So it's just that constant like improvement and just having fun, just enjoying it. Yeah, pretty deep stuff, but not trying to be cheesy. Yeah.
Interesting what you're doing.
Yeah.
Show me your Microsoft chart again, how you were showing that. I want to see that, and I'll tell you about look at the options table.
So
And tell me about see this, and then tell me which option contract would you see, and how would you.
it's very discretionary.
No, it's okay. I'm just gonna share that. Let's just suppose if you see that.
So right now I don't see opportunity because
it's all down. It's not
if it's below the pink, then I'm more bearish now.
Yeah.
So I don't
Pink
see.
is what, 200?
Yeah, my 200-day moving
And
average.
This is your 1 day, 1 year, 1 day chart?
Yeah, but normally I would buy something like this. Gap up, I'll do calls here.
No, okay, go to the chain. Do you go ATM? How do you choose your call?
Oh, it's so discretionary. I'll show you. Chain.
You don't sell puts to finance your calls?
No, I'm not as advanced as you.
Going down essentially.
I just buy it. My first trade was an options trade, but I always trade on TradeStation on my
Or
phone.
TradeStation?
Yeah, so do a
No,
trade.
I use the night trade.
So it's very discretionary in terms of like, I look at the chain and I look at just like, 6 months out. Wherever I feel, and then the pricing is also kind of discretionary, because I'm always buying contracts where it's like $1,000 bucks.
So you would pay, so if Microsoft is big, right, so even though you pay 18,
Yeah,
which is
I
100, so you would pay about almost $1,000 for one contract.
Yeah,
rather than-
yeah. So I would just flip it for like 1,000.
Yeah.
Yeah, and then I'll size up like, for Microsoft, I'll size up like 10 or whatever.
Stop loss or something like that, or you just
Uh,
carry it?
I'm playing pretty sloppy. Sometimes I would just take some losses to cut, to get out. I'll take like a couple thousand
And
loss.
that decision you will make on technical basis?
Technical basis, yes, and when I feel that the trend has changed from my intuition of over the years. I like to refine it more.
Yeah.
Yeah, it's not as grand as I like it to be. Because I know like in momentum environments,
Because
it's,
6 months, if you pay this 6 months, this is 1 year contract, so 1 year time value is not that. If you pay 6 months, you're gonna pay a lot of time value.
yeah. So it's all preference. I move around. It's never, I say 6 months, but I could do like 4 and 5, and then I'll hold it for like a month.
But if it's not right, then you've lost like almost 30% of its value, even if it didn't move much, it will still
Yeah,
lose your.
yeah.
lose
So,
your value.
yeah, correct. So a lot of my analysis is very like, I need to time the charts right.
That's what the thing is, your timing has
Yeah.
to be correct for.
I'm very delta driven,
Yeah,
if that
yeah,
makes sense, yeah.
Yeah.
Yeah, I'm not looking at Vega, I mean, I'm aware of it, but I'm looking at
For
delta.
long, the delta and the time, that's the two
Mhm,
things you can
mhm.
look at it. That's
Yeah.
nothing really much to do. It's a
If
very-
I want to switch over to like a Vega trader, I feel like I just do the volatility stuff. But I know that, I now know like from what I taught where my loose ends are, right? Like instead of pursuing deeper options knowledge, like the writing side, the selling side, I pursue global macro knowledge. But now that I've, kind of get a better understanding of that, I know my loose end is deeper options knowledge. I would go to that next. So I think within time, there's, you start to see the limits in what you can learn. Yeah, and then the rest is just all experience and application.
How far out do you go if you wanna?
Well, I mean, I have 2-year contracts, 3-year contracts on
So
it.
leads basically.
I mean, I got for the gold ones because I can't predict how long, but I feel a recession is within the
It's a
horizon.
huge time premium, right?
That's a huge time premium, that's the.
But to me, it's just like $200. I mean, but to you, you're probably like, wow, that's a lot.
Wait, what? 200? Okay.
$200 a contract.
Yeah,
Okay.
it is.
So $2.
Yeah, $2.
It's $2, but then.
Wait, do
there's
you go out
stop
for
loss.
money then?
No, I normally
think it
do
does 8.
for the leaps I
But
do
you
at
see,
the
if you
money.
contract, the stock price is only 20, 30 something, you just see how much percentage of the stock price, what you're paying on it, right? That's
Yeah,
what it is.
yeah.
Even your $2 would be at least, you're going 2 year out, you're probably paying 20% or something.
Yeah, it's cheap. It's already cheaper. So
Of that value.
Yeah.
Yeah, this is where it's just
Yeah.
people defer like what
Yeah.
should you go put, should you have more time, should you buy more time, or
Yeah.
should you go
Like-
put
like-
money out the money?
like my BlackBerry, I think I have 2-year contracts on it. It's just a starter position. It's against me, but it's a starter position, and I know that. I think in a 2-year time frame, we'll do some good will happen out of it. But I'm not gonna add because I'm wrong initially. But then it's because of global macro. Does that make sense?
Interesting, yeah, it might be a good hedge to go leaps on puts, leaps on gold.
Calls, yeah.
Leaps on.
Leap calls on gold.
Yeah, so that's what I have on gold miners.
Might be a good hedge than just buying
So
leaps
if you're
on
bullish, you
versus
can even
ETFs.
finance that by selling puts, right? I mean, you're saying that you go there, then you can reduce and your delta will increase as well.
Yeah, I mean, yeah. So the selling side, that's where I'm kind of like, man, like I guess. How was your
But
first
selling is
experience
only
selling?
the risk.
No, if you
It's
do
the
a sell
only-
spread, that's fine, right?
Yeah, they are fine. I mean, like,
If
the
you do a
selling
spread
more.
on the selling of
And
puts.
you can do spread, you can lower that also, right?
Yeah,
So suppose you go this one, what is DG, right? So suppose you go GG, if you suppose you 8, you can sell the 8 contract on the other side, the put side.
Right, right.
Yeah, right? They'll
Right.
give you $1 premium. You'll get $1 here, and then if you buy the $10
Mm-hmm,
to bait you, you only paid like $23.
Right,
And
right.
the delta would be almost, I don't know, you don't know what delta column.
How do you when you do a spread? How do you plan your like cutting your losses or like?
When you do the spread? Well, the spread is depends. Suppose you buy the spread for 8 or 5 in this case. There you will sell the 8 and you will buy the 5,
Right.
right? So you are getting, what would you get? Your $3 is your total spread width. So $3 is your total risk in there.
Right. I see what you mean.
And then you are getting for it is 70 cents in this case as I'm looking, because you're getting $1, you're paying 23 cents or 25 cents for 5.
Yeah.
So you're getting 75 cents for
Yeah.
the $3 risk.
Yeah.
So the way people calculate, they will calculate, I'm getting 75 cents on what money I'm putting 300 bucks.
I see.
So if you look at into time and you calculate return, that's $75 out of $300 risk.
I
So
see.
you make that much. And so if the stock stays at 8 or up,
Yeah.
you just make the 75 bucks on that much time frame.
Just cap.
The
That's what it
upside
is.
gets less
Yeah,
capital.
yeah, I see.
And the
Yeah.
only risk is
Yeah,
if,
yeah,
if
you-
you are below,
Yeah.
8 minus for the premium, you got 75 cents. Your risk comes 725-ish. If the stock is below 725, only is your risk comes on this particular trade.
I see. Yeah,
Like
yeah,
that. So this is how you just calculate that.
yeah.
I kind of do the sell that out of the money puts and to get some money, and then I will buy the calls. So to lower my calls, if I'm bullish, right? Like the way you bullish it,
Yeah, yeah,
that
interesting.
way then you will have cost to low, and then your delta is high, your return will be much higher.
Yeah,
That way,
yeah.
just to thought, to think about that.
See, this is where I need to
It's kinda
get the confidence in it.
The thing is, so right now, you could risk $200 to make unlimited.
That is true. If you buy a plain
But
call, it
you're
depends.
defining risk, you're only
But I'm defining it on the
$1.75
I'm
to make
defining it on the
$75.
put side, right? Not the call side.
Right, no, same thing, you could go long calls, or you could, sell put spread on the
I'm doing
puts.
both.
But then you're defining your risk on the puts, you're only
Because
getting
I don't want-
$75 and only risking, $125 or whatever, or
Right, exactly. That's why I'm
$225.
saying I'm defining
But
on that side.
instead, with his conviction, he's risking $200 to make.
But no, you can get it. I'm risking that 75, but the $200, what he's doing, I am still gonna put the buy the same call, but I am paying
Yeah.
less. I am
Yeah.
paying 75
Yeah.
cents less than
Yeah.
what he's
It's
paying
being
for the same.
financed. It's
It's
financed.
financing the call.
So it's financing the
Yeah.
call with
Yeah.
that. So I'm paying less, and I'm gonna make the same amount as he's making,
Yeah.
plus $75 more because of my that thing.
Yeah.
By doing the
No,
spread,
no,
by
you're
selling
defining,
puts.
yeah, you're.
Selling
you're
is spread on the put side because I want a limit. I don't want it. In this case, it's not.
And
But
the
buying
side
the
you
plain
only make
call.
75 cents.
Because this is spread, that
Yeah.
I'm selling
I like
the
it.
75 cents, right?
You
Yeah.
only make 75 cents.
That I can only make
Yeah.
75 cents, I agree.
Yeah.
But that's if I'm up.
Yeah.
But that 75 is gonna finance my call. So if I am wrong,
Oh, finance the call.
finance
with
the
the
call,
75
Yeah,
cents.
you-
right?
You
Because instead of
you
paying
gain
the
premium
$2,
too. Yeah.
in paying the
Yeah.
$2, I can only pay the 225 or whatever it is, the 75 cents less.
Yeah.
Which is a lot, percentage-wise, if you calculate, that will really make a difference. If you calculate the return on investment, will make a difference eventually. If you're bullish, you can do that totally. That's the easier way to
You
do
could
it.
also sell that 17, you could also sell that 17 strike too, and fund it.
You can, if you're that bullish, you can.
Yeah,
on
but
that
it
time
depends,
frame.
it depends where you think.
But it depends, the only
The
downside is
volatility
your
pressure.
obligation, because when you sell, you have
Yeah.
an obligation to own or sell, right? So you have obligation to own the stock at 17. If you think, yes, 2 years, it will go, GG will go to up 17, you can do that, but that's a lot of risk. I mean, that's just there, something, that I don't think I would do, but yeah, I mean, I don't know how, but that's something like that, I would do add the money out of the money to finance that,
Yeah.
or something like
You
that.
get crushed in volatility, and
Volatility crash is good for this, right?
So-
For sellers, volatility
so I got-
crash is
I have-
good.
because he's long, he's long.
I have
Long is not good, for the seller is good.
I have conviction, but not enough to sell some to finance it.
Yeah. If I had conviction, I'm just gonna buy, I would just buy a call and wait it out.
Well, I mean,
Yeah.
this is just an extra
Yeah.
bonus, you know.
It's
Yeah.
just-
So in today's market, it's just better to do box trades, meaning you do a straddle out of the money because of volatility, because it's going up and down. You don't know which direction it's going.
Yeah.
So once you hit your profit, you just exit the other
There's a
one.
lot of.
Well, it depends on what sector
Depends on
you're
the
talking
thing.
about, right? For I would say gold and silver,
Oh yeah. for
if you
gold,
have
silver,
conviction, you
It's
just
not-
go and buy
just go
straight.
buy. If you have a conviction, you go and
Yeah.
buy the plane, because.
Right.
I
other
would
than
say
that-
if anyone hasn't bought gold and silver,
Really?
go buy it, yes, absolutely. I
I don't have any
I
right
would
now.
say 80-90% conviction.
I was talking to my neighbor the other week, and he was talking about gold,
Yeah.
and we were talking like,
And
I
you would
wanna
do the
buy
same
like
thing as he was talking
like
about.
$2,000 worth
Like
of
I
have
gold
lots of
plates, but I don't
calls
even know
on it.
where to, where can I
Do you
get,
go to
where
these
can I
also?
do that?
Oh.
He said, yeah, go to like
Just
a,
a play leaves calls,
Yeah.
and
Dealer,
something
but
on with.
Yeah,
you don't know
companies
where to
like that.
go.
Yeah, you gotta find. It's like a
SLV,
sales thing. You gotta find. It's like an agent. You gotta find a gold agent.
You can all
Yeah,
get
'cause
that.
I just wanna hold it,
Yeah.
No, you don't want to do that, because like the insure and all that stuff, because they would test you, make sure,
So
you
go
know,
year
if
out,
you
just
hold it,
based,
it's.
I guess, so.
Yeah, it's a better hedge. If it's like $2, I think it's a good hedge.
Insurance on the gold?
If it goes
Yeah,
up.
No, you just buy
because
$2,000 worth of
well,
gold.
you can't.
I think
Or
if-
you just buy some, I'll just probably go with the ETF directly, because I don't want to research into what goes
break,
into
you
the
know.
But he has done the research for you.
Exactly.
Hey, I hope I'm right, all right? It's-
No, I mean,
if I'm wrong, I'm sorry, but it's
No,
just
I think the
education.
stocks that you mentioned, they're good.
Yeah?
Quality stocks, yeah.
You think so?
I started to do my own research.
Yeah. That's the goal, okay?
So, yeah.
It's good to see the groups trade when they trade in gold or something. Is the group focus have to have a subscription, or would they show as a?
So I think subscription.
Otherwise, they would not show. If I just want to go, what which these gurus have bought the how much?
Oh,
gold or
yeah. So like if you click, yeah, if you click on just,
a particular company, right? Let's suppose I got a company, I want to see, okay, this
Yep.
company, what are you searching? Which gurus have bought
Yep,
and what, how
yep,
much percent
yep,
is it?
yep, yep.
No, but it's your subscription I have to have.
Yeah, you have to have the subscription, and that's why I only advise it if you're going to use it, because this is a heavy
I
amount.
used to have it because
Oh, you-
I look at fundamentals a lot in companies, so I used to, but right now I don't have it.
Yeah.
But I used to follow that, but I don't have it anymore.
Yeah, so KGC is another gold miner, but you see who's holding it? Jim Simmons, Ray Dalio.
Actually, you know the whalewisdom.com?
Yeah, that one too.
That's actually, I use that.
Yeah.
They also shows
Yep,
about it,
yep.
about who owns what.
Yep.
this and
That one's like just focus on SEC filings or the 13F, yeah.
Some filings are
Yeah.
on those too.
So this one's more of a nicer dashboard and more deeper in analysis.
Yeah, and this is really good site for fundamentals.
Yeah.
It's pricey.
Yeah, it's pricey, but hey, I mean, you know, institutions, colleges are charging even more.
I used to pay 300 a year.
Is it? I think it's I paid 800, but
Only
I,
US, or do you pay
only
that?
US. If you want more, it's gonna cost even more.
It used to be 275K, I'm telling you, I had.
Wow.
It used to be
Wow.
275.
That's crazy.
They
Yeah.
increased it.
Yeah, I did a search on them. They make like 40 million a year, if I recall. It's
It's crazy.
yeah. The amount of sales they make, it seems like they make more than Y Charts, but Y Charts is newer. Now this is only data that I pulled from like market intelligence broker, so like a Discover Org, a Sales Genie. I don't know if you know any of those, or so you know Property Radar, the one I have. Okay. So basically, if you want like contacts for a business, you could get it through these intelligence broker, right? So, and then in there, they'll tell you how much revenue. And I saw Y Charts only makes like 2 to 3 million a year versus 40 million for Guru Focus. So I was pretty impressed with that. Yeah, but I gotta double check the numbers.
Y chart is mainly for the chart system. This is more fundamental. Do they show all the chartings also if you wanna see
Yeah.
the P ratio for 30 years?
Oh yes, yes,
Show
that's
that
why I like it. Yeah,
they
yeah,
show
yeah,
all the
yeah.
stuff and it's
So
like
I'll show you real quick. So 30 years of PE ratio is
for
awesome.
particular company or.
30 years of gross margin. We looked at that
Yeah, see,
earlier.
gross margin is good.
Yeah, I love it. 30 years of market cap. I mean, it's a little extra, but it's nice, right? 30 years of dividends. Let's see, cost of, look, 30 years of costs.
Cost of goods.
You want ratios, right? 30 years of ratios. So
Like return on the
cap
three
right here.
return
So
on
30 years of PB ratio,
Yeah.
price to book ratio. It's
And
awesome.
they show the chart. They should-
Yeah, they could chart it.
Or you can see the calendar.
It's a lot of data, so it's gonna load a little slow. But that's the beauty of it.
It shows the dividend also, right? 30-year dividends also, or dividends.
Yep. So this is 30 years of PB ratio, right? Awesome. And then against the industry as well, industry distribution and sector. So it does a lot of quality mathematics. Yeah, yeah. But again, I say start off with FinViz for a beginner.
FinViz I use a lot.
Yeah, FinViz, and then graduate into Guru Focus, because this one's heavy data.
I know this one too.
Yeah.
I just start beginning.
Yeah.
So what's your insight into real estate?
The real estate market? It seems pretty slow as of like the last month, right? I think it's gonna pick back up. Inventory's gonna pick back up in like late January as people adjust. I see a lot of price cuts. Yeah. In pockets of Sunnyvale, one realtor told me because she specializes in that area, she saw like 25 to 30%. I don't know if that's true.
At what rate?
Sunnyvale at the Sunnyvale's like 1.5.
Even gone down the price?
Yeah. Like listing, not like they would ask this much, it will get knocked down. So normally when they ask, it's a
Yeah,
little
it's always
overpriced.
Yeah, it dropped.
But the trend is like on the buyer side. The buyer has the advantage right now. So pretty interesting stuff.
How much it has fallen from the peak luster for now, what if you say, on the areas?
I mean, I've seen, so one home that we're trying to sell, the biggest one, 3.1, went down to 2.9.
Yeah,
So
at
that-
that.
at that level,
I've
right?
seen the sort of
At the 1.3 level, I see like 25K to 50K cuts.
Oh, yeah.
Yeah,
I thought you said 20-25%.
yeah,
Okay, that makes more sense.
yeah.
There's 60 days to sell it now,
So-
instead of it used to be just 10 days or whatever. It's 60 days, that's the list.
Oh, you're talking about days on the market? So
Yeah.
we had that
They have
statistic.
that on
It's
it.
it's been increasing.
Yeah,
Yeah.
Cupertino as well?
I know.
I think
And
it's
then Cupertino as well is like hot.
yeah.
But with
No, no,
going
no,
down,
no.
it's
So
gonna soften up.
Cupertino's still hot. We did a 1.8 home right near the I think it's Lawrence Expressway, but it's categorized. It's Santa Clara, but it's Cupertino schools. If you know that pop.
Exactly, I know.
Right? Yeah. So that one 1.8 sold for 1.8.
Yeah,
So
that's
that
what I'm saying,
that one,
that's
but
not-
that was
But I
before
think-
that was before December.
But
That
I
was
think
like, yeah.
if Apple doesn't rebound, it's going to soften up.
Yeah, I think it'll soften up, and I think there will be opportunity. You know, I mean, that headquarters is $5 billion to build. That land, the Apple land, I looked it up, 160 million to buy the land, 5 billion to build it. Oh man, or at least 5 billion in value, not to build.
Is the houses around that spaceship like shot up?
They're strong, dude. Like,
But they've
Yeah.
already gone up, right?
yeah, exactly. They've already gone up. So
It's priced in.
yeah, it's interesting.
I have a question about that. Like the people you see selling their houses, are they like baby boomers or?
Yes, most of the time right now, a lot of baby boomers are exiting, retiring elsewhere.
Like
So
downsizing?
yeah, they're going to like cheaper homes.
Yeah.
Some of them, like the ones that are aware of the markets, they said, they've seen this cycle before,
Cash out.
and it feels like it. Some of them feel like it feels like it, or they just can't afford to do another super cycle.
Uh-huh.
You know,
Yeah, and then what are they doing? They're buying like.
they're buying just a cheaper home, for like 300K in the Midwest.
Where are they going?
Sorry?
Midwest, like anywhere.
Anywhere?
Yeah.
That's what I
Yeah.
think, I don't know where I'm going.
You don't know where you're going?
Trailer park.
Yeah.
I don't wanna do that, I just wanna stay where I'm at, I'm comfortable.
Doing the training.
I wanna go somewhere.
Like you're doing options quite a bit.
I wanna go with my daughter, but then.
So this is a home right here.
Forget it, I don't wanna touch
We'll
it,
load.
earthquake area. I was thinking about, it's like, oh.
How about you, what's your?
Yeah. So this one was listed. This was a
$2
flip.
million.
What kind of strategies?
I keep it very simple. You just call it.
Huh?
Whether
So,
she
oh,
calls,
Not taking this price.
Yeah. This one we listed for 2.3.
Oh, it's a lot.
2.3, but this was back in this November. It was for 2.3, sold for. I'm sorry, yeah, 2.25 is what it sold for. 2.3 is what it listed for. And it was a pure flip.
Overall.
Oh, really?
Yeah.
The guy buy it,
Chinese money,
And that's why I was thinking.
just bought it cash like $1.5 million or something.
something like that. no, they put. I can't tell you specifics, but like about $1 million down in cash.
Very sort of-
How long did that take that
Right,
flip?
right,
But I have.
I forgot. It's been a while. No, if
right.
you.
You do a lot of different
Well,
part-time
you-
training?
once you bought it, renovate it?
Yeah.
Lot of
Yeah.
options, you do?
Me and my friend, we were like. we went to
Depending on
the
whenever the
syndicate
opportunity
meetup
shows up.
About that.
Yeah.
Gotten active recently in Morgan.
It's like, man, that looks too hard.
It looks too hard.
Especially here.
Yeah.
I mean, that's something else built, doing it in like Philadelphia somewhere.
Yeah.
There's no opportunities they found to
I
do that.
track all the Greeks.
Okay.
I kind of wish like this chat today was at the super bottom of a super cycle.
What do you mean, super fun?
Like right now we're at the super top, right? And I can't tell how much longer. But it'd be nice if it was like the bottom, and it's just like, dude, you got nothing to worry about. Like, that'd be nice. We'll see. Hopefully, if it moves in that type of pattern,
Yeah.
right?
Have you been day
Started,
trading?
interested in finance.
Yeah. Well, no, I've been doing the video,
And then
Oh,
right?
okay, okay.
So, and then also family came down for a month and about a month, a little bit over a month. So I've been spending a lot of time with them.
Yeah.
Yeah. But now it's like 2019. I want to like really ramp it up.
Yeah.
I've been, as of late, I've just been managing my gold positions,
Nice meeting you.
watching gold, and then just like like reading. And
And
I have a lot of books that I want to get through. Like I bought Ray Dalio's book.
You come here often?
Which one?
Not Principles, the new one.
Debt crisis?
Yes.
Oh, it's
Yeah.
absolutely, I would say
What is
recommend
it called?
everyone to
It's
read it.
it's like it's $45 or something. But Debt Crisis.
Online
It's like his analysis. It goes very deep. I recommend you look at it first before you buy it. Don't waste money if you're not gonna. It's heavy. It's heavy. It's heavy as hell.
It's
really good.
Yeah.
I'm sure it'll be at the library too.
It's new though. It's new. Okay.
And again, by the way, Dario is absolutely convinced about gold and silver going up.
Is he really? I haven't checked. Wow. Okay. I gotta look at that too.
Thanks, Kate.
Hey, thanks, Chris. Welcome, man.
So what do you think of real estate in the next 3 to 6 months?
Next 3 to 6 months, I think it's gonna follow indices. It's typically, it looks like a month lag from what I'm saying, right? So February we had a dip, March and April the agents felt it. So I think if the dip sustains, we're gonna feel it even more. Yeah. Like the team I'm on, he's like number 3 in the office. He's starting to ramp up his activities, like cold calls and just reaching out to them, because he knows like potentially it's gonna slow down. Like he knows like the inbounds weren't as hot, so business is kind of slowing, so he has to ramp up.
Real estate.
But that's from a transaction perspective, right? I think I showed you already, but I don't have it open. Yeah, I post. You're in the group chat, right? It's that one chart of the inventory. Well,
Okay, I'm joined it. You forwarded me that.
yeah. So I don't. Actually, I do. I could pull it real quick.
So I just moved here. It's good if you see the stocks doing really well now. Because of the new ACAP stuff that's coming out, and that's why I knew as well looking at the new CEO came in, everything happened, and it's going really well. So a lot of my conversation gets started with stocks.
That's true. That's a good one. All right.
Before that, I was at Qualcomm.
Qualcomm, yeah.
Oh man, a lot of optimistic stuff.
Yeah, likewise. Yeah, see you around here.
Doors is off. Mortgage loan. So this guy is I think I told you this already, but I would send you this. Just check it out. He's a practitioner, investor, flipper, developer, lender in the real estate market for decades. He feels that real estate markets could drop 30% and still only be fairly valued.
In the next couple of years, what's his time?
He calls this. Let me see the title of this. So this is pretty recent too. He only blogs once in a while. House prices are more vulnerable than most think, and I would rather send you this and let you read, because the way he thinks about his investment thesis for the home prices is very mechanical, and he sounds like an engineer, but he's a real estate guy.
Okay.
Yeah. So he calls it like right now the people who are getting mortgages are more like investors than the true end user, he calls it, or end consumer, I forget. But I would read it. This is the comment he made right there. What?
Is it gonna go down? Why would the investor want to go in there?
Why would what?
I mean, if the price is gonna go down and not making money, why would the investor?
I don't think prices will go down super crazy. I think it will just slow down and go sideways and not appreciate until the next money printing cycle. I think the money printing cycle already priced it all in. So at this point, like prices it's gonna look like gold, right? You notice how in 2012 gold stopped and then it just went sideways and rounded out. I personally think real estate's gonna be like something like that until the next money printing cycle to juice up the economy. Because it's a lot of the money managers think that this economy is no longer a free market economy, they say, though it should be. It's more of a managed economy, meaning like they manage every recession.
Yeah, actually, in the Bay Area, right, it's very
It's different.
tied to the technology stocks.
So I'm seeing Workday outperforming, so I'm thinking Pleasanton. Yeah.
Actually, I commented on that. I would short Workday.
You were short Workday?
Yeah. I think it's
one
of
of
the
like
few long sort of
yeah.
the ones stocks that are still standing up.
Or like
Yeah,
Microsoft is also signing up.
That's another one, right?
Yeah. So like some of the leading guys I follow, they're talking about puts on Salesforce and Microsoft, and I'm like, wow. It's
In
Well,
the
if-
second signings, signing up.
if this is a real bear market, right? That's always happens.
Right.
The strongest guys always
Yeah, you're right.
fall
Yeah.
Later.
at the very end. Yes,
End.
absolutely.
Yeah. Hey, I hope you guys don't think I'm like a super expert or anything. I'm just piecing together my thoughts
Well, no,
and
it
sharing.
it makes sense. Most of it makes sense. Yeah.
Yeah.
We don't know if this is a bear market or a bigger correction. That's the problem.
Well, that's
but it
the.
feels like it. This is very different from like the Fed. You know what happened in Fed, right? Volatility shot
Yeah,
up.
yeah. Well,
Big
Fed was
shot
pretty
up,
big,
now it's
but
trendy. That's
Yeah.
that's the best signal I could gather. The wig shot up in Fed and then slowly, because there was fear. Now there's no fear.
There's no
It's just
fear,
controlled sell-off, and it's just dead cat bounces, controlled sell-off. But now you see 6 days in a row, Wix has gone down, which is kind of odd.
Yeah.
So it's very hard to figure out what's happening from the Wix.
Yeah.
I just generally follow the Wix to see what's the hell happening to the S&P, just to
Yeah.
correlate that.
Yeah.
But
Yeah. Signals are choppy as hell.
yeah, it's very choppy and it's controlled, and Wix is trending higher, which is very scary.
That's why when Chris asked me like about the whole day trading stuff,
Yeah.
that's what I'm resorting to now,
Yeah.
because I want to like.
But I've been
I'll do
listening
something.
to all these Jeffrey Gundlach and
Yeah.
Stan Druckenmiller
Yeah.
and
Yeah, that's good stuff.
They're all very bearish apparently. They're like we're
They
in a
are.
bear market.
Yeah.
This is a bear
And Larry Cooperman, one of the meetups that we did, I showed you that he's exiting the business because he wants to exit at the top, not at the bottom. He doesn't know when the top is there, but he feels it's near. So he exited, he returned the funds to his clients. Billionaire money manager.
Got it, got it.
Yeah. So a lot of them are exiting.
Interesting.
I want to be on the same side of the control. But unfortunately, I can't exit the business. I got to go make money. Okay, guys. 2 hours, 46 minutes. Thanks so much.
Thank you so much.
Yeah, I'm glad you guys had fun. Yeah. Yeah, I'll try to get back to everyone. Your name is Darsh? Okay, another person texted me as well.
Thanks.
Hey,
Very
no,
good.
Thank you,
hey,
it's very
hey,
nice.
thanks so much, guys. Thank you, guys.
So he's selling, right? The guy was just exiting the business, so he's selling it.
Yeah.
He didn't think people would make money.
Well, he just thinks the environment is going to get a lot tougher. Let me just close out this real quick. People online, thanks so much for coming out. We're gonna, continue next week. Number 100 today. Ooh. Okay, see you guys. Thanks so much. For all the questions, I apologize for not being able to catch up on it. It's a lot of people to talk to. Okay, all right. See you. There we go.